delivery markup. So all in all, healthy. And to answer that question very specifically, is there any fatigue creeping in? Not really. On the daily setup, it is approaching oversold, overbought levels, but still some distance. So I think if you have a position, you should continue to hold trailing stop losses at about 855, 860 mark. Wouldn't suggest opening a fresh trade on this one, because as I said, it's approaching overheated territory, so there could be an unfavorable risk reward ratio. But yes, if you have, you should continue to hold, keep trailing stop losses. Still got good momentum going for it.
Okay, all right. We'll have to couch the question on PSU banks for a short while. But gentlemen, on that note, thank you so much for taking the time, and pleasure speaking to all three of you. We're joined this morning by Anirudh Sarkar, who's a co-founder and CIO of Equinova Investment Managers. It's a good time to be talking to you. Anirudh, thanks so much for taking the time, and good morning to you. How are you? Good morning. So what are you making of the situation as things stand right now? Because clearly there seems to be money being taken off the table after a solid week of gains, because that uncertainty once again is swirling. So what is your approach at this moment?
No, I think basically what you're seeing today is basically kind of an overreaction to whatever the news flow was there over the weekend. And to be honest, I think it was a bit too optimistic to expect that, when both sides they met at Islamabad, a peace deal will be an outcome of that. I think that was a bit too optimistic. And I think with whatever is being announced overnight with regard to the blockade in the Strait of Hormuz, I think market is kind of reacting to that. Having said that, I think, as you just displayed on the screen, practically every sectoral index is deep in the red. And whether it's large, mid, small, banks, the real estate, everything is down. So I think there's nothing much to do. We continue to do what we have been doing, picking pockets of where earnings are and just avoiding the noise which comes around every day.
Anirudh, good morning. So,
good morning.
Let's assume you went into this weekend not being as optimistic as the street was. Your positioning may have been that way. Do you believe that the ambiguity prohibits you from putting capital to work in a small corrective move that we've seen? Or do you believe that there is merit in recognizing that crude prices as an average in quarter one being high could wreak havoc in earnings, and therefore try and look at raising some cash levels?
I think one thing which we have been factoring in all our estimates, in fact, before the war started, whatever was the estimates for our portfolio companies, we have taken around 10 to 15% kind of I would say, decline on those estimates. And I think this will get reflected in the first quarter of FY27, because I think the fourth quarter won't see much of an impact from the crude or the war, because most companies had good inventories. And also, I would say that the blockage also happened somewhere in the middle of March. So I would say impact will be visible in the first quarter, and broadly, good amount of, I would say the market has already factored in those impacts in different pockets. Unorganized to organized is one shift which can be visible, because if you see many of the companies which got impacted was due to the shortage of the gas. And most of the larger players, they had better supply chains, and they were better organized to ensure that their businesses don't get disrupted significantly compared to the smaller players in the unorganized space. So I think it will be a very, very interesting first quarter to see how the impact of the entire event plays out for Indian companies.
Very good morning. Will you go out and buy anything today? Would there be a buy list ready in case things turn? Because I agree with you, it would have been optimistic to expect that everything would go smoothly on the talks and both sides would come out, shaking hands and hugging each other. But having said that, it's not all ended in terms of negotiation. If I had to look for a very thin silver lining, the thin silver lining is at least the ceasefire is held. So would there be a buy list you have right now?
Absolutely. I would say that obviously we are deploying for our clients. Any new money which is coming in, we are deploying. Okay. But I would say whatever is the market reaction today, and if you see the last 45 days of the way the market has reacted, I think it's evident that these are all the bargaining tools from both sides. And investors should use these dips, these announcements, these noise in the market to deploy, because we have seen whenever the things get okay, there's a very, very sharp upside in the market. In fact, if you see from the lows which we had made, we are almost up 1600, 1700 points on the Nifty, and it was over a very short span of time. So I would say use these events and the noise, because it's very evident that de-escalation has happened. Talks are underway. In fact, there are other countries now who are also wanting to propose to host the talks. So I would say this is more kind of a reaction of the event and not a time to sell. Rather, if someone is being on cash, it's a good time to deploy.
Okay. So if you're saying, but this is a little contrary, Anirudh, to and we were discussing this morning, contrary to the fact that AMCs are seemingly sitting on a slightly bigger war chest, because the flows have been pretty decent in the month of March. And so they seem to, and we spoke to one CIO this morning, and he said that if he ordinarily had between 3 to 5% cash, he would keep a little bit more. He would keep 8%. And it must be said that this is a relatively smaller AMC, so the room to maneuver is more. So if you have that room to maneuver, seemingly in the mutual fund space, people are saying, I'm going to keep a little more cash. So what you're saying is contrary to that.
See, Alex, I'll be very practical, because I've seen these discussions on the cash calls for a very long time.
Yeah.
A few percentage points cash calls here and there, it doesn't really impact the returns, to be honest, because if you are 92% invested or 94% invested, that extra 2% cash will not help you on a day when the markets are down by 180 bips. So I would say that broadly, if you look at the cash for the ANC industry in the month of March, I think there was a report yesterday at an ANC level, the cash from 4.83 went down to 4.7%, which means most asset management companies deployed cash.
So point is made, Anirudh. Let me ask you a different question then, which is that from your perspective, where is their margin of safety? Which means that if you are deploying and you are meant to be fully deployed, then where is your comfort level and where is your margin of safety to say that even if you fall, the fall is going to be limited?
Absolutely. So I think basically the sectors where I see that growth continues, and in fact we continue to be overweight on those areas. One is power capex, second is auto ancillaries, the third is aerospace, fourth is domestic consumption, because these are broadly areas where a lot of the resilience is there with whatever the external things are happening. In fact, if you see many of these companies in the power capex, they are all at all-time highs, in spite of whatever news has happened, because I think domestic capex on the power side, domestic capex on the industrials, auto ancillary, aerospace, these are companies where order books execution is continuing without any hindrance of whatever is happening around the world.
Okay, Anirudh, thank you so much for joining us this morning, and pleasure to speak with you as always. Let's hope there are enough opportunities to deploy cash as the situation looks quite scary. Actually, the screen's looking fairly scary this morning, for lack of a better word. But let's move the attention to companies. Park MediWorld in focus today. They're setting up their expansion strategy with the launch of a new multi-super specialty hospital and expansion of its Mohali facility. The move strengthens its presence in the Tri-City region and adds to its growing healthcare network, is what they have been saying. We're going to be speaking to the management and they're joining us on the show, but we also have Varsha with us who's joining in for more details. Varsha, take it away.
Yeah, thank you so much for that. So yes, two news I would say when it comes to Park Medi. One is they've launched new super specialty hospital in Haryana, and of course they're expanding their Mohali facility to strengthen the Tri-City presence. Now, key specialties offered in Panchkula Hospital is oncology, neurosciences, orthopedics, and which includes robotic assisted surgical procedures, and the combined bed capacity across Panchkula and Mohali will be almost 850 beds. Onto the business highlights, average occupancy for the company stands at around 65% versus 62% last year, and the ARPOB, that is average revenue per occupied bed, increased to rupees 27,406 from 25,500, and total patient footfalls also is up 24% year on year. Talking about the medium term expansion plan for the company, by March 2028, almost 2,000 beds will be added across 6 to 7 hospitals hospitals, and the exit capacity will be almost 5,260 beds, and the long-term aspiration is to scale up to 10,000 beds over the next 5 years. Talking about the margin framework, well, the steady state EBITDA margin are guided at 26 to 27%, and the sustainable PAT margin is guided at almost 15 to 17%. So overall, a lot of expansion on the way when it comes to Park Medi.
Okay, Sanjay Sharma, whole-time director and group CEO of Park MediWorld, joining us now on the conversation. Mr. Sharma, thank you so much for speaking with us. First, if you can set the context of your expansion plans in this Tri-City area, and let me add to that, how do you hope to compete with other large chains in this area? Because these are also well-covered area by hospital chains.
Good morning, Tamanji. Good morning to you and good morning to your viewers. Thank you so much for inviting me to in Tri-City, we feel that it is not only the patient base coming from Chandigarh, Haryana or Punjab, but large patient load is coming from where healthcare is deficient in North India. That is Jammu and Kashmir, Himachal Pradesh, Uttarakhand, Upper UP area. They all travel to Delhi, and the first stopover is in Chandigarh, Tri-City. That is why we have expanded the bed capacity, and we are looking at 850 bed capacity, which will be the largest in the Tri-City, providing healthcare, so that it is a one-stop place for all the patients which are coming from North India, Haryana, Punjab, and they do not have to go to Delhi, where the treatment cost will be much higher, and stay and boarding and lodging will also be very high for them.
What are the timelines that you're seeing for these expansions, both in Panchkula and the Mohali facility?
Panchkula, we have already commissioned on 10th of April this month.
Okay.
And 350 bed capacity has been launched, and it was very well received. In fact, we had more than about 1,000 footfalls on the first day of 10th of April. And Mohali, we are looking at November 27 to add 150 high-end tertiary and quaternary bed in already existing 350 bedded capacity, which is doing nearly 85% occupancy.
Okay. Mr. Sharma, very good morning. And I want to ask, and these are new facilities and services that you're offering in new areas as well, particularly oncology, for example, in Panchkula. I'm just trying to understand in the various services that you offer, if you were to splice it in that fashion, the revenue that you're currently generating and expected to generate in FY27, then what is the kind of mix going to be?
See, here we would be providing the highest quaternary and tertiary services.
Okay.
Besides high-end onco services, we'll also be going for organ transplant, like kidney transplant program. And soon enough, we'll be also starting a liver transplant program. So they will contribute, high-end tertiary care would contribute nearly up to 65 to 70% in the revenue margins. Plus, we are also including robotic-assisted surgical procedures, which will be used for high-end cardiac procedures, joint replacements, organ transplants, multiple neurosurgeries, and other areas where it can be utilized.
For context, sir, where did it stand at in FY26? Approximately, you can give us a range, and where do you anticipate that it will go? And I understand that Q4 is still pending. So whatever you're comfortable with sharing, and where is it likely to head in FY27?
We will be reaching our target very easily, what we have mentioned for FY26, because the numbers are to be audited. So I'm not at the liberty to come up with it. 9 months numbers are that we have clocked about 1243 CR at a PAT of about 27% and a PAT of about 17% and EBITDA of about 27%.
So just okay, yeah. Just to follow up to that, if you're saying that these relatively high value procedures are going to take a larger share, the natural assumption therefore is that your average revenue per operating bed is going to head higher. And so therefore, how much do you anticipate there is room to further increase that metric?
See, we pride ourselves to be in the affordable section. That is why our RPOB is about 27,500. But we feel that with these high-end procedures, the RPOB should increase by about 10 to 12%.
Mr. Sharma, do you believe that the average revenue per bed independent of what happens in the near term or the next 12 months, have a chance of really going up as your expansion plans fully come on stream, let's say over the next 3 years? Or will we see a period of that metric coming off simply because of the capacities that you add, which then naturally leads to lower RPOBs?
See, with the high-end tertiary and quaternary product mix, the RPOB is bound to increase, and we are looking at roughly about 10, 12, 15% of RPOB increase annually. But we still would like to be in the affordable section. We are not looking at 75, 80,000 or 1 lakh RPOB at all, because then we move out of the affordable segment.
I have one more broad question. There is a lot of chatter around how medical personnel trained in India are in a large demand overseas at much higher salaries or wages, if you will, and therefore that export of that personnel might overall eventually lead to maybe some constriction of available people, resources, as well as higher salary levels as well. Is that something that the healthcare sector will have to contend with simply because the sector itself is expanding at a great rate? You are doing that. A lot of your peers are really also ramping up their capacities. Could that become a problem in 2-3 years?
Neeraj, this was a problem, say about 20, 25 years back or much before that, when the facilities, international standards in healthcare were not available within India. And that is a time when a lot of brain drain in the medical environment was happening to the countries like US, UK, Europe, etc. But now with the international facilities and the high-end product mix being available within India, a lot of doctors and clinicians prefer staying within India and close to their hometown or places where they're comfortable with regard to their children's education. And that is why the brain drain in the medical facility is now on a decline in India. And with the private setups also coming out with the medical colleges, I feel that the surge of clinicians should increase substantially within India.
Just trying to understand, Mr. Sharma, how much of your exposure is to government schemes like Ayushman Bharat, because you are in the affordable segment as well. Is there, any kind of color that you can provide on the timeline of payments, etc., that you're receiving and the extent of exposure that you have to payments from the government for subsidized healthcare?
Yeah. Since we are in the affordable section, our tariff is in sync with a lot of government insurance schemes. And when we started with the IPO, that time it was about 80% coming from the central government insurance schemes and 20% coming from private insurance and cash. Currently, it is about 75-25%. And we feel that going forward by the next year, it should be 65% coming from the government insurance and 35% coming from the private and the out-of-pocket expense. With regard to the government insurance, 93-94% is from the central government. So it is like a sovereign bond, and there has been no default to date in past 21-22 years ever since we have been functioning. With regard to the Ayushman and other schemes which are state government and central government, there our exposure is very minimal, about 2 to 3%.
Okay. And what about the timelines of the payment you receive from these government schemes?
Yeah, in the central government scheme, most of these systems are now being digitalized, and fast-paced systems are being coming over. Currently, it takes about 120 days for the payment to come over, but we feel that in the coming times, it should get down to about less than 90 days.
There is a 120-day wait for payments to come in for about 75% of your revenues right now. Am I understanding that correctly?
That's right, ma'am.
Okay. Thank you so much for speaking with us, Sanjay Sharma there of Park Medi World. We're keeping the corporate focus on this morning. Gallant Ispat is the next company that we're turning the spotlight on. It's set to benefit from the latest round of steel price hikes announced by major producers. Hot rolled coil prices have moved higher this month with a parallel increase in cold rolled products as well. Before we get on, Mayank Agarwal, CEO of Gallant Ispat, to speak more on this, our colleague Parth joins in with key details. Good morning, Parth.
Good morning, Tamanna. Thanks a lot. So the reason why Gallant is in focus today is because steelmakers are rising their HR coil prices by around 3,500, and this hike of around 5.7% will push the HR coil prices to 64,500 rupees per ton. Apart from this, the cold rolled coils will also see a hike of around 3,000 rupees, pushing their prices to 68,000 rupees per ton. Now, these rising industry prices will directly boost the realizations and margins of Gallant, and the price tailwinds will benefit its production run rate of around 8.8 lakh metric tons in FY26. Apart from this, as we already saw in their latest business update, that they have already hit a capacity utilization of around 91% in the Q4 of last year. Moving on to their guidance and outlook, the company is currently executing a phased capacity expansion to 12.3 lakh metric tons, and the 3,000 crore capex which the company is doing is fully funded via their internal accruals. The company will also be securing captive mines, which will structurally improve its EBITDA by around 2,000 rupees per ton, and the management expects continued volume growth and strong pricing tailwinds.
Okay. Parth, thank you. A very interesting summation, and from the looks of it, fairly bullish when the stock is in the green today, incidentally, on a day like this. Mayank Agarwal, CEO of Gallant Ispat, Johnson right now to talk about the current picture as well as the outlook ahead. Mayank, great having you. Thanks so much for joining in. If I were to believe everything that Parth is telling me, it seems that you're on a road to growth, and from FY26 to FY28, 29 or whatever the timelines are, there seems to be a very strong growth prospect ahead of you. Would that be a fair summation?
Very good morning to all of you, and thank you for having me here. Your colleague Parth has pretty much summed up our current financial year, which has just closed. And yes, we are very excited with the results, the capacity utilizations, and the EBITDA margins of approximately 9,000 rupees a ton, which the company is able to generate, especially looking at the markets that we saw in 3 quarters of FY26. So we are very excited with that. And with the capex that Parth was talking about of 3,000 crores, almost 1,500 crores will be worth of capex is being done in capacity additions and solar power generation of 78 megawatt. And all these 1,500 capex will be completed in the current FY27 itself, and we will have the production kick in the H2 of the current financial year. So because of this, we would see a reasonable volume growth expectedly in the current FY also, and in the next FY, it will finally accumulate to the entire year operations of 1.29 million tons of total capacity. So volume growth will definitely be there in the next 2 years.
Mayank, sorry, and we'll get to maybe some questions around the issues from the conflict as well. Are there issues in operations, etc.? But because you mentioned this volume growth number, is there a number that you're putting to it? What is the presumable or hypothesized volume growth for FY27 and FY28 when the entire capacity comes in for the year? Would love to know the volume number assumption.
So currently in the FY26, we have operated an overall capacity utilization of 86%. And while we are adding 0.25 million, which would be commissioned in H2, sometime in the beginning of H2, so we can expect 50% of the 25% capacity that is being added kicking in H2. So yeah, we are expecting a volume growth of 10 to 15% in FY27 and the entire 25% in the next FY.
Interesting. Okay. So then, and basis what you're saying, Mayank, you're seeing 50% of the 25% capacity addition take place in H2, right? And so from that perspective, the second half is going to look dramatically different from the first half. And I would assume that Q4 will look better than Q3 as well, as incrementally you keep adding production. So from that perspective, what is the kind of trajectory that you anticipate it's going to be the same for revenues as well, right? And also, therefore, the follow-up to that is going to be on realizations. At this juncture, it seems like it's heading northward. Is that the right assumption?
That is absolutely right. The realizations have definitely improved in Q4 also because of the prices going up, as already explained by Parth. And going forward, because of the volume growth, definitely the realizations would be there. And of course, Q3 beginning, we would be commissioning the facilities one by one. So effectively, Q4 should be dramatically different in FY27 because this entire capex is not just going into the capacity additions, but it is also some bit of it is being spent for operational efficiencies. So while we should see the volume growth also, we expect better realizations on the EBITDA per ton basis also in Q3 onwards. And with the solar also kicking in, it will further reduce the power cost. So yes, Q3 onwards and specifically in Q4 FY27, the results should be dramatically different. And you are absolutely right about that.
So therefore, given what you're talking about in terms of costs coming down, Mayank, as well, and more capacity coming on stream, can you give us a sense of the margin trajectory in that? What are the peak margins that are possible? And I don't want to necessarily hold you at gunpoint to give you, tell you to give me this answer, but just in terms of mapping that potential as things stand right now, as you've just described it.
So currently, if we compare 9 months period of FY26 with 25, we were able to generate a margin of 8,750 per ton. That is 8,750 rupees per metric ton, which was 8,000 last year, FY26, sorry. So there is a 10% growth, which is actually about 17.5% is approximately the total EBITDA generated in 9 months. And of course, with the volumes coming in and the economies of scale would apply, along with the operational efficiency. So even, see, the first 3 quarters, we have to understand that the realizations were pretty weak. So, of course, the margins would totally depend on the realizations. But what is in our hand is to ensure a better operational efficiency so that we can survive in any kind of markets, and which we have shown in the first 3 quarters of FY26. And with the further costs going down, definitely we can expect much better EBITDA realizations, provided EBITDA margins, provided the realizations support us a little bit on that front.
Mayank, hi, good morning. Tamanna here. Just trying to get a sense of what Q1 is looking like and the impact of the blockade of the Strait of Hormuz for you. Of course, this will be industry-wise, but for you specifically, are you seeing any input costs go up dramatically right now, cost of energy, etc.? Can you just give us a bit of a picture there?
Yes, very good morning, ma'am. And definitely with the war, which seems to be not called off and not in the near future anytime soon, it will put pressure on the raw material energy side specifically as well. But we have a very robust module for our raw material sourcing, where a very good chunk of energy is being sourced domestically, that is Indian coal, and which is backed by long-term linkages. So yes, there could be an impact, especially in the sea freight and the prices on the coal side. But the margins and the realizations would also improve if the scenario continues. So we do not see a very big problem in terms of reduction in EBITDA margins in Q1.
Okay, what is the extent of impact on freight rates and coal prices? And are you able to increase prices in the same tandem? I know HRC prices have already been increased, but are you able to increase it to match up?
Yes, till Q4, we were able to match up the prices and transfer the cost impact directly. And while the current quarter has just started, I mean, it's just been 10 days. So we have to wait and watch. Currently, we do not see a problem, at least in Q1, in terms of price absorption, because this is a good season and we being in long products, up to till the time the monsoon sets in, which is almost the end of quarter 1, I feel that we are very well placed.
Okay, so Q1, you think you're not going to have such a huge impact so far, despite everything we've seen in the last few weeks?
Correct.
Okay. Thank you so much, Mayank, for coming in. Mayank Agarwal, there, CEO of Galantis Path, taking all of our questions this morning. And one of the companies that is really looking optimistic despite everything that we've seen, the stock also doing okay this morning. All right, the other big story we're tracking, the government has cleared 52 firms under the Textile PLI scheme Round 3, proposed investment stand at over 6,700 crores. Before we speak to R.K. Vij of the Textile Association, Parth is joining in with more details on what this means for the industry. Yes, Parth?
Thanks a lot, Tamanna. So that's right, 52 new companies have been approved under the round 3 of the Textile PLI scheme. These approved firms are proposing an investment of over 6,700 crores and the projects are expected to generate a turnover of over 21,000 crores. The focus in this round of the PLI scheme will be on MMF, apparel, fabrics and technical textiles, and it will not only boost the domestic manufacturing but also create more jobs in the country. The firms that were already approved under the PLI scheme have already started production. They have already invested over 900 crores and generated a turnover of over 4,400 crores in the first 3 quarters of FY26, and they have also recorded exports worth 3,363 crores. So let's see how the newly approved firms will affect the sector's output in the coming quarters.
Okay. Thank you for that, Parth. Mr. Vij joining us. He's, of course, from the Textile Association. Mr. Vij, thank you so much for your time this morning. What does the PLI scheme mean for the industry? Specifically, what are the details of the scheme?
Ram ma'am, good morning. This is the very right time that Government of India has come up this PLI 1 scheme in 2021-22 with an budget of 6,000 crore, 10,000 crore of rupees. So this, because why this is the right time? Because in this textile, this FTA is there. So most of the good brands are looking for the India. Recent agreement with UK and the further with the EU will, this is the right time PLI scheme has come. Bangladesh LDC by next year. So this is also a good chance for us. Another national textile technical textile mission is also there to promote textile. This PLI scheme, I'll just brief you. The production link incentive scheme was the first kind of scheme introduced by the Honorable Prime Minister and the textile ministers to promote man-made fiber and technical textile and the garment and apparel industry, because apparel and garment industry always give more employment, and textile being the second largest after agriculture gives the employment and contribute in export also. I'll just brief you.
The PLI scheme, of course, very important, and it will take some years to come through. But you know, since we have you here, we want to understand what is the situation the textile industry is facing right now because of the Middle East crisis, because of this war, in terms of exports. And is there any help coming from the government?
Yeah, I'm coming to you. On 28th February, this war started, and the last, this quarter, March, if we see up to in the March end, of course, we were having the inventories at the lower rates, our raw material was lower. So this March month was very good, but due to shortage of raw material, PT and MEG. MEG comes from Saudi Arabia and Kuwait side. Due to Hormuz Strait, we are not able to get, and the prices of PT and MEG increased tremendously. So it is difficult that it could not be passed on to the downstream industry. But the government has taken a historical step by making this custom duty on PTA and MEG from 5.5% to 0%, so that it should be available at a reasonable price. So we are thankful to the government. This they have done for the first time, and the government also given the facilities to for the credit also, banks also, and that you can delay your installment also. So government is helping whatever to promote the textile industry in India.
Mr. Vij, good morning.
Good morning.
I heard you say in your opening answer that with this PLI scheme notwithstanding, there are other moves that are happening which will also benefit the Indian Textile Association, notably in the European side as well. Can you lay out for us that if the PLI scheme were to take a little bit of time in eventually seeing its final approval, will India's exports to Europe, presuming that this blockage ends and all of that happens, show a significant bump up because of all the FTAs and the agreements that have been signed?
I'm just telling you, this PLI scheme came 2021-22 at initially with a investment, 100 crore investment and the 300 crore investment. Out on against that, already about 64 companies enrolled in the first part of this PLI 1, and second part of the PLI 1, which was extended up to 31st March 2026, that they have reduced the investment from 100 crore to 50 crore and 300 crore to 150 crore. Now coming to the point, with this PLI scheme, which some of the companies have already started and taking the benefit also, we have become the globally competitive, because in this 5 years, almost 30 to 40% of our investment in 4 to 5 years, central government gives back to us in terms of incentives. So we are globally competitive. And with this, fresh investment has come in this scheme, and right from raw material to the end product, because the PM Mitra parks are also there. So we have become globally in spite of this war and other problems, our export in textile has not come down. And with this new FTA and this PLI scheme, more investment, more employment, more we will be able to feed to the yarns and to the good brand. So we hope that with this PM Mitra Park, PLI scheme, NTTM scheme, our export will increase to the other countries, Europe and other countries, if at all we are not able to feed USA, but now the USA is also 18%. So our all material has started going to USA. And I just wanted to tell what, of course, the PLI 1 scheme is very good.
Sure.
And but I just wanted to tell the government.
Sir, we have to go into a break in 30 seconds. If you can wrap up this answer in 30 seconds, please.
Okay. Thank you.
Oh, okay. You wanted to finish your point, Mr. Vij?
Yeah. I just wanted to finish up time in the PLI 1, because 100 crore first investment and 300 crore, the turnover was 200 crore and 600 crore. When it reduced to 50 crore and 150 crore, the government, I don't know how is it missed that the turnover remained the same. If suppose 100 crore is 200 crore, and in 50 crore it is not possible to 200 crore, and 150 crore is not possible to 600 crore.
Got it, sir. So that change should come. Fair call.
Yeah.
I'm sure somebody would be listening. You would have made your representations as well. All the best for that, Mr. Vij. Thanks so much for taking the time out and joining us.
Thank you very much. Thank you.
All right. We need to slip into a break on the note that the markets have stayed low. I mean, we haven't quite recovered from that 400-point downtick, but there are select names which are actually showing some serious traction. So, for example, Adani Enterprises, despite the market being down 1.7%, is in the green, 1.27% at the high point of the day after gaining significantly last Friday. Adani Energy Solutions, I wonder if it's in the green, but it had a very strong business update. The other one which is doing really well is Vari Energy. Vari Energy is up 2% at 3346. I'm talking about companies with a sizable market cap, all of which seem to be buzzing, or some of which seem to be buzzing. We take a break, come back, do more market spotting and get you some more experts.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ खास होने वाला है
कुछ खास होने वाला है
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most All right, back with India market open 1.5% lower for the markets. The IT index too, incidentally, is now as much lower as the Nifty is. Remember, it started off reasonably okay, but I think it has succumbed to some bit of selling as well. So the rupee depreciation, if you will, really hasn't helped. HDFC Life, that upgrade today, 1.5% higher. NTPC marginally higher. Everything else is in the red, with Eicher Motors and Maruti leading the list and Interglobe not too far behind. Our self-coined mobility index is not doing too well right now. Okay, let's move on to news and updates. Sources tell us that the companies have asked SEBI to change the QIP pricing methodology as formula floors outpace the market prices. Nimit is here with the details. Nimit, just simplify it for our viewers. What is it that companies have asked SEBI to do?
Yeah, so how QIPs are generally priced is based on a weighted average of either their 26-week historical average, their price over the last 26 weeks, or their last 2 weeks, whatever is higher. And in the current market where prices are really low, the 26-week average, which reflects a very far behind price, is far higher than the current market values. And QIPs being offered at those prices today are not being bought by investors simply because they do not reflect the current market prices. Because of this, industry bodies, investment banks and companies have asked SEBI to change or relax this pricing valuation so that they can go ahead with QIPs, which have been over the last 2 years one of the strongest fundraising routes for the public markets. This has completely dried up this year so far. Prime database numbers tell us that 4 QIPs have taken place this year so far. This is against 16 in the last 6 months and 20 in the same period last year. Now what they have asked for specifically is if you can relax that 26-week window and make it 8 to 10 weeks, which is more reflective of current prices, or remove that higher off criteria so that only the last 2 weeks average can be seen. Now these are the two demands which will reflect the price of the QIP more close to the current value which investors are looking to buy, and that is the demand that that these industry bodies and companies are putting to SEBI to make QIPs an attractive route again.
So important update. We'll see whether that finds traction with the regulator. Thanks so much, Nimit, for getting us those details. Now, moving to news from Swiggy, because, and this is important, Nandan Reddy, the co-founder of Swiggy, has stepped down from his role and moved on from the online food and grocery delivery major, or rather he will move on in the coming days. Alongside his departure, the Swiggy's board has also announced a series of leadership changes. Mahima joining in to tell you what they are. Mahima, first of all, that exit and then everything that's changing at the company.
Right, Alex. So, this came in, of course, on 10th of April, the announcement that Nandan Reddy will step down as the co-founder of Swiggy, effectively immediately, and he's also vacated his board seat as well. The reason given for this is that he said that he wants to explore new passions and independent projects. Now, the other management rejigs that have happened is that Renan D. Castro Elvis Pinto has now replaced Roger Clark as the nominee director, and this is from Process. Finny Krishnan and CFO CFO, that is Rahul Bothra, both were elevated to executive director. So these are the other two rejects that were announced along with this. In terms of how Nandan Reddy has, overall scaled Swiggy, he spent the last 12 years, of course, building this from the ground up and has navigated, the tech side of things as well. He's kind of set up the foundation operation and also led the AI concierge service as well. Apart from this, since he said that he wants to pursue new passions and new businesses, some of the businesses that he's already invested into include Unicorn, the Rise, also the backed EV startup that is Vidyut Tech, and tech upscaling platform called Pesto Tech. Seed funding he's done in startups like Chai Basket, Stance, Mava Health, and he's invested in diverse platforms like Felicity Games, Supernova, and Neend as well. So these are some of the businesses that he might explore going forward. So this is the overall view of what's happened with regards to development and what he's done so far in Swiggy and what lies ahead for him.
Okay, interesting. Thanks for that, Mahima. Let's move on to another very important story. China is making a move to halt sulfuric acid exports from the month of May. Yes, the same one that you used in your chemistry labs. Now, the thing with this one is that the tightening global supply at a point of time when the markets are already strained by geopolitical disruptions could have an impact on many sectors, including the fertilizer space. How and what kind of an impact? Varsha has the details. Varsha.
Well, thank you so much for that. Yes, fertilizers will be impacted, along with you have defense, metals, and copper industry or segments which will be impacted. But before analyzing which all companies will be negatively impacted, onto the this news, if you see, producers and large buyers have been informed, notified, and the sulfuric acid prices, if you see, have risen since Iran conflict began. So it has up almost 25 to 30%. A closure of Strait of Hormuz have disrupted the shipments from the Middle East. And why this is important? What's the importance of sulfuric supplies? Middle East produces around 1/3 of global sulfur supply, and this is a key raw material for sulfuric acid, which is used in your copper extraction and phosphate fertilizers. And China is actually conserving sulfuric acid supplies ahead of peak crop planting season. And onto the impact on the different segments, starting with the fertilizer companies, higher sulfuric acid prices will raise raw material cost and the margin pressure likely if companies are not able to pass on those increase to the farmers. In India, sulfuric acid imports, if you see, total around $118 million in 2024. All the fertilizers companies will be impacted from this move. You have Coromandel, Paradeep, Tumble fertilizers, Rashtriya Chemicals and all. Onto the copper, if you see, sulfuric acid is vital for copper extraction process, and about 16% of the global refined copper relies on acid-based extraction. Onto the which companies will be impacted? Of course, we have Hindustan Copper, Vedanta and Hindalco Industries. Onto the defense equipment impact, large amounts of coppers are needed to replace damaged radars and systems, and each requires thousands of kilos of copper. So Bharat Electronics, Bharat Dynamics will be negatively impacted. Lastly, on the semiconductor vulnerability, ultra pure sulfuric acid is required to make advanced chips, which will disrupt missiles, radars and guidance system. You have Tata Electronics, Keynes, Dixon and L&T Defense. All these companies will be impacted because of the huge surge in the sulfuric acid prices.
You've capped it off very well. Thanks so much for giving us that update. So keep a watch on all of these stocks that are impacted by sulfuric acid supplies not possibly reaching on time or getting impacted. Remember, it's not a story only about crude oil. A whole host of supply chains get disrupted. But let's go across now to talk to Abhay Agarwal, Managing Director of Piper Serica Advisors, joining us on Talking Point this morning. Abhay, thanks so much for taking the time as always, and good morning to you. I'm wondering what your frame of mind is this morning, because you had a few sessions of a bounce back, and today there seems to be worry because of this swirling uncertainty that started again this weekend. So what's your frame of mind at the start this Monday morning?
Yeah, good morning, Alex. I think what I can assess and see is that there is some degree of tiredness that investors have with this whole geopolitical issues. And I think the markets are not reacting as widely or with as much volatility as we have seen earlier. So there is a bit of tiredness to reacting to news. I think markets are trying to form a bottom. The conversations are around new deployment. Early stages, I won't say anybody is going to go all in. So I think people are kind of coming to the view that, look, sooner than later, difficult to predict the timing, but this issue will resolve, or the big difficult part of this geopolitical issue will resolve. Lingering issues will remain. They will never get resolved fully. But any resolution that allows for free flow of materials, goods, supply chains easing, I think will be taken very positively by the markets. So I think the market is already kind of built in all the negatives that it had to build. The expectations that we also have is that there is no point being, too negative all the time. We need to also look for opportunities. And I think that's what, we are doing, Alex.
It's a fair point, and I think you've described all of our sentiments as well when you say that there is tiredness, even from our perspective. Speaking about this conflict, it's gone on long enough. But having said that, where are you finding comfort? Is it, and you're saying it's in the price. I'm just wondering, because you're talking about BFSI as a package, you're talking about certain other pockets where they've been beaten down to such an extent that people are saying, okay, I don't mind deploying at these levels, but what is the kind of impact you should be willing to take on earnings in FY27? Because let's face it, this is our new normal.
Yeah. No, absolutely. This is a new normal. This will stay, in some form or fashion since Trump has been a president. There have been hotspots all over the world, in US, around the world, from tariff war to, the geopolitical war. It will be something else. So this is absolutely agree with you. This is a new normal. I think the markets will have to build this into it's their expectations as we go forward. So what we are doing, Alex, is what we do all the time, which is focus on growth opportunities. So we are not looking for opportunities where something has got beaten down, so it becomes attractive purely on valuation basis. I think investors will be rewarded for buying high quality growth stocks at reasonable valuations. So my advice would be to look for companies that are in the mid cap, maybe small cap, large small cap space, that are on a high growth trajectory, and focus on them rather than looking at beaten down large caps. Because I think a lot of beaten down large caps, even with the market recovery, will just become value traps. I don't think they are growth stocks anymore, especially if you look at the large private banks. IT services, another huge disappointment. But the good news is that, Alex, there is always opportunity. There is always a bull market going on, even in a bear market. So opportunities in pharma, fast growing pharma innovation stocks, electronic manufacturing, advanced electronics, in automobile components, we are seeing very strong recovery. In some of the niche chemical companies are still guiding for very high growth. So I think that is where we are going to focus on. We are already focusing on. We are not worrying too much about beaten down names. They may just turn out to be value traps.
Okay, that's an important point, Abhay. Very good morning, Tamanna here, and good to speak to you after a while. Value traps, how to avoid the value traps? Would it be just safer to look at, large caps, the index, stay safe with the understanding that these will have to improve, and now valuations are looking decent?
Yeah, good morning, Tamanna, and as always, great to talk to you. My worry is that a lot of times investors, and we, including our investors, institutional investors, they look at large caps as being defensive. But I tend to disagree. If you look at the performance of some of the large caps, in 5 years, there's been a negative return. And I don't think anything is going to change there. So chasing defensiveness, chasing an improvement in price just because market recovers, I think that is not the strategy that one should play. Market rewards investors who back growth. And I think even in large caps, investors will have to look for companies that have got beaten down but still on a growth track. So if the growth track is missing, then and you're just looking to invest purely because earlier the valuation multiple was 35 and now it's 15, it may drop to 10 also. So, I don't think there is any safety in large caps generally. I think the real safety and return are still in growth stocks.
And in these growth stocks, what are the spaces that you're looking at, Abhay?
So some of the spaces, Tamanna, that look like secular growth spaces, which will override geopolitical issues just because of high demand. One is pharmaceuticals. We are seeing a lot of good work being done by large small caps and mid caps. I think the large companies are still focused on generic manufacturing, which I think will have its growth limitations. But then there are a bunch of innovative companies that some of them we have added to our portfolio also recently, which are going to guide for a 25 to 30% annualized growth for next 4-5 years. Now, they will look expensive if you look only at the PE multiple, but once you start building in the growth, they're frankly not as expensive. So pharmaceutical CDMO innovation is where we are focused on. Second part is the whole auto component and auto electronics space, where we are seeing Indian companies that are becoming global suppliers. And this includes forgings also, specialized forgings. So I think this is another space that we are quite bullish about. Third, we continue to be fairly bullish about the whole EMS and advanced electronics space, purely from sovereignty stack also, because the government is also now focused on making sure that we are not dependent on international supply chains for our basic components. So I think there are opportunities, and as I can see another name on the screen right now, I think electrification of mobility is going to be another big theme, renewables. So I think there are enough pockets for investors to look at, and we are also looking at the same, Tamanna.
Abhay, good morning, Neeraj here. What within the themes for the future, whether listed or unlisted, are you most bullish on? Because one can quickly enumerate that from the looks of things, defense is going to be right up there selectively. Energy transition, you mentioned, data centers is a theme, semiconductors is a theme, and a lot of these pockets, the country doesn't have a choice but to put money to work in order to build capacities. Where are you most constructive on? Whether it's listed or unlisted is separate.
I think the biggest one I would say, Neeraj, is the whole semiconductor space. Because this is a space, semiconductors very simply, if I were to say, are the brains of any machine, from the laptop that I'm talking, from the screens, the viewers are watching this, to their phones, to cars. Every EV has now 80 sensors, which means 80 semiconductors. So our growth, the country's growth, is heavily dependent on semiconductor availability. And unfortunately, we are 100% dependent right now on imports of semiconductors. Even the cheap semiconductors, which are 100 rupees or 80 rupees priced, we import them also. So that's the level of our foreign dependence. Now, over next 5 years, a whole ecosystem will develop with government support, with domestic buyers support, that will streamline the supply chain and move a large part of it to India. We will not be able to do it 100%, but my guess is that 50 to 60% will move to India, and this will be a growing demand for our economy. So I am very bullish on the semiconductor. I think there are listed companies that are focusing on the packaging part, the OSAT plants, and in private space, there are companies that are focusing on design. So I think this is a huge space that will develop. The second one that will already developing, as you mentioned, is complex electronics for defense procurement. Now, I'm not talking about the big guns and tanks and that kind of stuff, but more from national security perspective, the electronics that drive the modern warfare, including drones, autonomous drones, the batteries that charge these drones, the surveillance cameras, the chips that replace Chinese chips. So, once you start looking at Neeraj, it's a humongous opportunity space that investors should look at and benefit from, rather than getting lost in, large caps.
Okay, fair call. Now, but that is a very bottom-up space. So I asked you for it, and thank you for that answer. Now I'm gonna kind of spread this out a little for the benefit of people who can benefit out of any of these new age themes via the listed space in the mid cap, small cap space as well. is the second leg of defense, which is not the one that you mentioned, but effectively manufacturing drones, artillery, ammunition, etc., looking very strong too. Because I mean, I just read this morning that an unknown Czech company has now gotten a $60 billion deal to supply ammunition to the EU. Similarly, every country, every continent is going to up that ante, right? India is doing that too. Is there merit in trying to own the listed defense space?
Well, I frankly think that if you don't have these names in your portfolio, you're not going to be able to beat the market, because there is already a huge demand. Neeraj, the problem is that our Indian companies, since they are young, they're not able to match up with the demand. But the demand environment is very solid. I think it's a 6 to 12 month of innovation that they need to do, and they will become, they will grow their revenue by 2 to 3 times within next 2-3 years. So I think we are in that zone where the orders are pending because the products that are currently available are not able to match up with the defense services requirements. But I think it's a matter of time. I'm very bullish on the ability of our companies and scientists to innovate. So I think in 6 to 12 months, you will see very strong order books, very strong profitability of these young defense companies.
Right. That's an optimistic note to end this conversation on, Abhay. And let's hope that this period of fatigue and tiredness goes away very quickly. Thanks so much, as always, for taking the time. All right, now on to an important update. And sources are telling NDTV Profit that the Ministry of Power, in consultation with the Bureau of Energy Efficiency, has rolled out a draft corporate average fuel efficiency 2027 norm. And Shrimi is joining in to tell you about all of the details here. Shrimi, what does this entail?
Yeah, so, CAFE Norm 3 has been in works for some time. In fact, they put out the draft norm in September, but a lot of companies, auto companies have been given their suggestion and feedback on the tightening of that norm. And what we are picking up that, the government has now proposed a softer glide path for fuel efficiency norm. And this is under the draft 2027 till 2032 framework. Ministry of Power, in consultation with BIS, has released the draft and seeking a stakeholder comment. So the key change is a more calibrated approach. The government has revised essentially the emission curve, and that will allow slightly higher fuel consumption over a longer period compared to the steeper one which they proposed in the September draft. Now, while automakers had pushed for a flat target, the government has retained phased tightening, but with a softer slope. Now, I will not get into the detail of the slope because it's very technical, but what essentially it does is that the flatter curve reduces the earlier advantage for heavier vehicles and is seen as a more balanced approach across the segment. While at the same time, policy also sharpened its push towards cleaner mobility. Sources says that the EVs and hybrids will benefit from a credit mechanism and will allow car maker to offset penalties or trade credits. In fact, higher emission vehicles may be facing, higher penalties under this new proposal. There is also a relief for smaller cars, with manufacturers selling fewer than 1,000 units exempt from this strict compliance. Do note that norms will be tightened from April 2027 till FY32, and the revised draft signal, of course, a more pragmatic transition, but we need to wait what stakeholders is now going to say on the new norms.
Got it. All right. Shrimi, thanks so much for that. An important story to keep track of. Now, the latest updates we're also getting is that supply chain disruptions are causing white goods manufacturers to have a significant impact on the way that they're doing business and the pricing that they're doing. Mahima is joining in to talk about what's driving the costs higher and how companies are responding, because there have been price increases. Mahima?
Right, Alex. So overall, if you take a look at how it's impacting the entire space, right, because of the conflict, there's crude price and metal prices which is going up, and plus there's supply chain disruption that is altogether putting pressure on all of these companies when it comes to the raw materials and components that they import. There's also weakening of rupee, which is also overall impacting the cost of components for AC that are being imported from outside. And On top of that, there's new energy efficiency norms that are adding to further costs of production. So overall, all of these factors combined together are pushing costs for all of these white good manufacturing companies up. In terms of how key raw material prices have fared in the last 1 month or year, copper prices have gone up by 35% year-on-year basis, and aluminium price around 29% year-on-year basis. The HEP prices have spiked almost 46% month-on-month basis in March 26 itself. What companies are doing because of this is that all of these companies are taking price hikes anywhere between 3 to 15%. LG and Hitachi have already gone ahead and raised their AC prices by 5 to 7%. Average price hikes is around that 15% mark, so at the higher end of the range that I mentioned of that 3 to 15% mark. In terms of how category-wise hikes have been taken, fans have been around 5%. RAC has the maximum price hike coming in between 5 to 15% because a lot of that is being imported. So it has both effect of the raw material prices going up plus the import cost as well. Washing machines and refrigerators in that range of 3 to 5%, and water purifiers, air purifiers as well as vacuum cleaners anywhere between 5 to 10%. In terms of companies that get impacted because of this includes Blue Star, Voltas, LG Electronics, Hitachi, Crompton Greaves, Consumer Electricals as well as Whirlpool. In terms of what management has already told so far, Blue Star did speak to NDTV Profit and said that the company sees a possibility of hike anywhere between that 10 to 15% mark and will be majorly transferred to consumer. The impact of this will be overall on the volumes as well as margin. If it's completely passed on to the consumers, volumes will get impacted, and if it's not completely passed on, margins will get impacted. More likely, there are price hikes coming in going forward in the coming quarters as well. Largely, Q4 will not see a lot of impact because they are just sitting on 6 to 8 weeks of inventory. But largely, the impact will be seen when Q1 FY27 numbers come out. So this is the overall view of how this entire West Asia conflict is impacting the entire white goods space.
Thank you for that, Mahima. And, it's just a bad time. Last year, AC makers were having a bad time because the monsoons came in early, so there was less demand. This time, it's input costs going up, so some of that GST sheen completely wiping off. And this is, we don't know the entire extent, right? Yeah. Steel companies, copper makers, it's going to be across the board as this carries on. Well, for now, I don't know, we're trying to look at the light at the end of the tunnel. Yeah. You can maybe look at it this way, that at least markets are off its lows as we close off India market open. But the pressure still remains one way or the other. Another reiteration by the US president that the blockade will take place 7:30 p.m. India time for anyone coming in and out of Iranian ports. So we'll have to wait and see.
Just before him going to sleep should be interesting. Let's see what happens in 8 hours. But yeah, I think that's aptly put. For now though, we call it a day on this leg of a very interesting India market open. From all of us who put this show together, thanks so much for watching. Stay tuned though. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
कुछ बड़ा होने वाला है।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani. With me as always is Puneet Zaveri. Before we start taking your stock related questions, which by the way you can go ahead and ask on the numbers that are flashing on your screen up there. You can either WhatsApp us or call us with all your stock related queries and we'll be more than happy to answer them. But let's take a quick check as to how the markets are doing right now. And Alex just went by and he just said this one thing which we all can relate to right now, which is it's Monday the 13th instead of Friday the 13th. Friday we did see good moves coming in for the markets, but unfortunately it's Monday the 13th today. Right now we're trading with cuts of about 1.4 odd % Puneet as we speak.
He did say that ideas don't have monopoly, so it's a good
No, but he deserves that credit. And slightly off of course from its day's low point for the Nifty 50, but still trading with cuts of about 1.4 odd %. A downtick for around 330 odd points is what we're seeing on the Nifty. Let's try to pull up the heat map to see as to what are the counters that are putting that kind of pressure. You have Eicher Motors, one of the top losers. So I think Puneet, autos today is finally seeing some profit booking. There's Eicher Motors, Maruti Suzuki, which is down both almost 3.8 and 3.7% each. There's Interglobe Aviation, Shriram Finance, which is again taking a knock today. I think Shriram Finance is just that one stock that moves in the direction of the market, but a lot more than what the benchmark is doing, right? SBI, Geo Finance, HDFC Bank are some of the counters that are also losing grounds in that range of 2 odd %. But the two counters that are holding up really well is Adani Enterprises, which is up 2.5%, HDFC Life, which is also doing fairly well, up 2%. The bank Nifty also, let's try to pull that up, is trading with a cuts of about 1.8 odd %. Now in that 54,800 levels is what we're seeing. 1,000 points for downtick is what we're seeing on the bank Nifty. Still slightly off from its day's low point, but still trading in the red. Let's quickly pull up the advanced decline ratio and see as to how the broader end of spectrum is looking like, because overall I think even the broader end of spectrum is under pressure but doing slightly better as compared to where the benchmarks go, and there is a narrowing of that chart, Puneet, as we speak.
Right, and that largely will be the hope from today's session, that we can hopefully come back, recover a lot of those losses that were at the start of the trading session. The expectation that at the start of a 300-point downtick on the implied open because of what has happened over the weekend, and largely continuing to see that at the moment. And as you rightly highlighted, we're seeing correction on the auto pack, and realty has also reversed all of those gains. So within the sectoral impact, you can see that the Nifty realty, which was a gainer over the last 3 days, so the honeymoon period lasted only just a couple of days actually, and then we've yet again come back to being impacted from the global factors. So unfortunately, the market heat map showing you every sector in the red right now. From the morning, you've seen some buying actually in the Nifty Realty, which was the top loser. So, but the PSU Bank and Auto, Nifty Bank all down in trade today because of that. For Shriram Finance specifically, you had JP Morgan initiate coverage also with a target price of 1180, but that hasn't done too much for the stock as well today. In terms of the mid cap and the small caps, they were doing well at the start of the trading session. Nifty Bank continues to be under pressure today, yet again. Impacted by the PSU stocks and the selling there. The mid-cap 150 is now below the 1% correction mark. So that's a good start to Ask Profit at least. And the small cap also recovering much better at this point of time, down just 0.8% now. So hopefully over the next 3 to 4 hours, we'll be able to recover a lot of those losses yet again. But let me welcome in Saurabh Jain now, as well as Gaurav Sharma on the technical side. Saurabh, of course, of SMC Global Securities, Gaurav Sharma, Associate VP and Head of Research at Globe Capital. Gentlemen, both of you, thanks so much for joining in. Before we start, there's just, one question which we are taking on from Friday, where we, because our fundamental guest on Friday didn't have a view on Fino Payments Bank. But Mahima, why don't you take us through that query? It's a very interesting one, and especially at a point of time of a stock that's been in the news flow for a lot of variety of negative reasons. But what was that query from Sarath?
Right, so basically his query is on Fino Payments Bank. What he's saying is that he's holding 10,000 odd shares at the levels of 300. And he says that he's purchased this from a slightly long-term perspective, hoping that there will be some recovery. But I think he's gone ahead and purchased this at the highest level because he's sitting on a loss of around 16 lakh rupees right now. Saurabh, a lot of news flow has come in, right, with regards to the management getting arrested, etc. And because of that, we've seen the stock near more than half since then, right? Considering all of this news flow and fundamentals of the company, what would you advise our viewer to do right now? Sarath wants to know, because 16 lakhs is not a small amount of loss, right?
Hi, good morning. See, it is not prudent to put such a huge amount of money in a small cap stock like Fino Payment Bank. Now its market cap stands around 1,000 crore. Apart from the corporate governance issues, the financials are also not good. If you see, there is a kind of a degrowth in their bottom line, and top line is not growing at a pace which market likes to see. So that is why the stock is tanking down. On the valuation front, yes, it looks comforting, but when the things are not moving the way it should, the valuation should get suppressed, can get suppressed more from here also. So I think as of now, since he is low holding for the long term, I think the last 2-3 quarters were not good. Corporate governance issues are there. So I think he should wait for the March quarter earnings and then take a call. Maybe if the results come in the way they were coming, and the issues with the respect to the management remains the same, then I think he must opt to get out of the stock.
So, would that be the strategy, Saurabh, even though Q4 earnings come in, whatever the commentary comes in, because of the quantum of the loss, would that be the strategy yet again? There will be a difficult turnaround, so averaging wouldn't be the right strategy. Is that the correct assessment?
See, averaging can become the right strategy when you see a turnaround. See, market gives, when one sees the PE, it is you can call it price to enthusiasm. Enthusiasm usually comes from the earnings growth, and that is not the case here. So here the price earnings are getting compressed. So there is no point in averaging out. And when the things are not moving the way, see, it is a game of a demand supply. When demand is not there, supply is evidently there. So in my opinion, I think it is always prudent to get out and park your money maybe in the banking space, for example, in the names like Indian Bank, or for that matter Canara Bank.
All right, so that's the holistic view coming in on Fino Payments Bank. Let's move on to the next one, which is coming in from Nitish, who's writing us from Andhra Pradesh, asking about NHPC. He wants to know the right time to enter this counter from a short-term perspective. Gaurav, a very good morning to you. I'll come to you on this one. Your view on the charts for NHPC?
Hi, Mahima. Morning. So, NHPC has been an underperformer in a way. But the good thing is that the stock is trading sideways from quite some time. All throughout the Iran conflict, this stock has remained in a very narrow range, which in a way should be taken positive. Now, as far as the entry is concerned, momentum is most warranted here. So wait for a rise above 80, then enter the position, take a stop at 75 at that point, and look for targets close to 85 and thereafter 90.
You, Gaurav, and welcome to the show. Very good morning to you as well. But let's go across to our next query. And viewers, you can call us on the number that's flashing on the top of the screen. Speak to us as well as the experts directly on your stock-related query as well. You can also WhatsApp us if you haven't already. Both the numbers flashing on the top of the screen. Next question is an interesting one. It's on Acme Solar by Komal from Jaipur. She's holding 1,500 shares bought at 300 rupees per share and asking what she should do now with this counter. Should she exit or and buy later, or continue to hold at this point of time? Stock's trading at 283 and up 5% today, possibly up today because of HSBC. They've initiated coverage on the stock with the buy rating as well. But Saurabh, On Acme Solar, any view for Komal?
See, our view is positive on the power generation utility companies and Acme Solar we are not covering, but yes, the space is looking good. And some of the stocks which are looking good from this space are NHPC and NTPC.
Okay, all right. The next one is coming in on GE Vernova T&D. Our viewer Jeet from Kolkata is asking about this. Wants to know if this is the right time to enter or shall I wait for some more time? Gaurav, your view on the charts for this one?
See, if it is for a short-term position, then he may actually consider entering at these levels gradually, buy some point here and add up on the rise, because as I've been mentioning here, momentum is most needed. If the stock is into a buying momentum, it will run up towards high level. Otherwise, it will either trade sideways or will fizzle down in these market conditions. So buy some quantity here and add on a rising momentum.
Got that view, Gaurav. The next question that's coming in is from Sunny from Karnataka, and his question is on Glottis. It's a stock that every investor would just want to forget from their portfolio at this point of time, a rank underperformer in that sense. And Sunny is holding 1,000 shares bought at a 75. Now, I think the IPO price was roughly around 120, so he's bought it even after the correction, and even post that, Glottis has slipped into the red and continued to do so. Now, any view here, Gaurav? Because on the charts, I know it's a very limited time period, but what should Sunny do? Because a lot of investors do, send us this query from time to time. Any evidence now of a sideways momentum on Glottis?
Puneet, hi, morning. It is a very small cap company, just about 550 crore of MCAP. Very limited data, and since whatever data I have, it is clearly in a downtrend. We don't track the stock, so I don't have a holistic view on it. But as far as charts are concerned, sell on rise is a strategy that should be adopted. Going ahead, I see the stock facing stiff resistance around 61, 62 odd levels, so he should consider offloading his position around that mark.
Okay, all right. We've got our first caller for the day. I think Datta is calling us from Bengaluru. Very good morning to you. What's your query about, Datta?
Hi, good morning. I'm thinking to take a fresh entry in the stock RR Finance. I just wanted to know, is this the right time to enter to this stock? I am looking for a long time, at least for 1 year.
Okay, got your question. I'll take this up with Saurabh then. Saurabh, your view on other housing finance?
See, I think what we are looking in the real estate space is that the growth is tapering off, in fact, in the luxury segment also. So some kind of a slowdown is being witnessed in the real estate. And for that matter, I think housing finance companies' stock price are also suggesting the same. I think there is, I think from the long-term perspective, from a year or so, I think it should be avoided. Rather, I would suggest him to go for the pure banking play, the names I suggested like Indian or Canara.
Got the view, Saurabh. But the next question coming, it's an interesting one from Aditya from Tamil Nadu. His question is on LIC. Now, he's bought it at roughly 740 rupees per share, holding over 500 shares. And Saurabh, actually, it's been in a downtrend in this space, and largely because of the 96% holding by the government, everyone just anticipating that selling to come and then probably looking at the stock. Today, there's an important board meet considering bonus issues, so could be the right step in that direction. Would you suggest him to exit, hopefully, in that up move that you might see because of the bonus if announced today? What would be your view?
I think you're absolutely right. I think one should consider to get exit out of it. And moreover, what has happened because of the new tax regime, the incentive to save has also got diminished. Earlier people used to park their money in the traditional plans, traditional life insurance policies, which these companies used to enjoy, in which these companies used to enjoy good margins. But that is not the case of now, as of now. Now people are opting for the pure, risk-based plans. So I think going forward, the business will also go down, and that is what the stock prices are reflecting.
Okay, all right. So that's the view coming in on LIC, but it's time to take a look at the F&O space and, of course, what the setup is indicating right now. And we have Sharad joining by, as always, to give us perspective on that. Sharad?
Thanks a lot, Mahima, for that. And as we are celebrating last week, and now you're seeing a big reversal at play, and of course some positions will be also in focus. Remember, there's a volatility also at play. Tomorrow trading holiday also. Only one green is there in the Sensex, that's NTPC there, but sell-off happening across the board, be it the FI heavy, IT and the banking space as well. And of course the Reliance and Interglobe Aviation also negative news flows for both of these counters. BankX also the story remains the same, but nevertheless you could say that the Sensex setup is looking slightly better than BankX, but nevertheless both of them are seeing concerns. The VIX also jumped up. The power related stocks are doing really well. Adani Enterprise, that's up 2%. Tata Power also seeing a good buying in this kind of a market, and of course there's a standard disclosure for Adani Enterprises. But apart from that, short covering includes the life insurance space, HDFC Life and JSW Energy making it to the list, but it's not very convincing trade, to be honest. Long unwinding for SBI and Samvardhana, while shorts, you could say around 60 to 70% of the F&O space is filled with that. And let's just see where the fresh shots are coming, and that's where we see Eicher Motors. That stock is down 4%, good sell-off in the auto space, and also Bank of India, PSU banking space also is taking a hit. So yes, today we are seeing much more red in the day's trade.
Got that view, and thanks so much for that, Sharad. But let's go across to our next caller now from Hyderabad. Ayn Reddy actually has this stock query for us. Mr. Reddy, I hope I'm pronouncing your name correctly. What's your query? Welcome to the show.
Hello, sir. No, thank you, and good morning to everyone. And hope this day will turn green at any point in the next few minutes.
That's the hope.
Well, that'll be the hope. You're all cross fingers at this point of time, Mr. Reddy. But go ahead with your query.
Yeah. So my query is regarding Ather Energy. It's one of the electric mobility players of India.
Right.
Unlike Ola Electric. It has been doing very great, and I've been constantly trying to take a position in Ather Energy since a while.
Right.
But the valuation comfort doesn't seem to come up at any point, despite the market fall and despite the purchasing part dip within the Indian domestic consumer space due to the war and other tensions. I haven't been seeing any fall in the stock price. So I'm feeling this FOMO, that fear of missing of taking a position in this stock. But today, after this update by the Indian government, the push for electric vehicles,
right,
and pollution guidelines and all, I've been trying to take up a position, a sizable position of my portfolio in this. And what do you guys think?
So would this be a long-term bet, Reddy, or a short-term one?
I'm guessing I'm putting a long-term bet, no, nothing.
Long-term bet, got it. Well, firstly, Reddy, of course, the big difference between both Ola and Ather, the pure play EV manufacturers, has been the sales, because it's been a completely divergent picture, and that's leading to what you're seeing on the screen as well. Stocks at a 52-week high today at 903. But Saurabh, from an IPO price of 315, just I think almost a year back, it's been a rank outperformer, right? And I think the Delhi EV policy coming in, we'll see, of course, the viability of that, but probably having a trigger on a few names today in the auto space. But do you think the valuations are now a little stretched for Ather, and maybe some more clarification, or how do you see it? Because on the fundamental side, the scooter sales are rocking through, right?
You're absolutely right. The valuations are on the higher side, and company is still not profitable. The point is why the stock has become so expensive, because it is the only play available in this space, because other players like Ola are doing nothing, and this is the only company which is marching ahead with their sales and the expected growth rate. The valuations are really high, and in fact, in my opinion, they are reflecting the profitability which is yet to come in the next 3, 4, 5 years. So probably there may be a case where you will see the stock price keep rising or keep staying firm as of now, and when the earnings will come, then we might see the compression in the multiples. I would not suggest to park more than 2-3% of your portfolio in a stock where the valuations are at such high.
Okay, all right. So that's the view coming in on Ather Energy. The next one is from Zakir, who's writing us from Dubai, asking about Rights Limited. He's purchased 220 shares, at the levels of 220, and 1,000 shares is what he's been holding. wants to know as to what should he do, whether to hold, average or sell this counter. Gaurav, I'll come to you on this one. With regards to the charts, go for rights. What's your view?
Still, the stock is trading very weak. From a short-term standpoint, a sell on rise is the strategy that I would advocate at the moment. There are multiple resistance plays around 220, thereafter 225, 230 zones. So our viewers should gradually utilize these bounce back opportunities to offload their positions.
Okay. All right. We've got our next caller. Shiva, I think, is calling us from Hyderabad. Shiva, very good morning to you. What's your query about?
Hey, good morning. My query is about HDFC Bank, and I bought around at a range of 837, 300 shares. So I want to get the medium-term opinion from the experts.
Okay, just want to understand, Shiva, did you see the charts while buying it, or did you see the fundamentals? And can you define medium-term for me?
Around 6 months, I looked at the fundamentals.
Okay, 6 months. Okay, all right. I try to get the chartistic view first, because 6 months to give a fundamental view will be slightly difficult. So Gaurav, I'll come to you on HDFC Bank. What are the charts indicating right now? We've seen some buy flows coming in when it comes to mutual funds this quarter.
No doubt, when HDFC Bank tumbles like this from 1,000 to close to 700, the fund flow will certainly be there. I see a further rise coming in towards 850 levels in the immediate near term. Thereafter, if that sustains, even levels close to 900 are possible. So from a short to medium term standpoint, he can hold on to his position.
Got the view, Gaurav. The next, a couple of questions coming in on the EMS space. Firstly, from Ramu from Hyderabad. He's holding shares of Keynes Tech, bought at 4712, Saurabh. And he's holding roughly 39 shares. So he wants a 3-year view on the stock. What would you recommend? I also just want to club in another question from Prashant, who wants to enter this space. And he's tracking Dixon as well as Amber, apart from Keynes Tech. So what's your view on both of these questions, largely in a similar space? Because for Prashant, he wants to enter a stock, and what would be an ideal pick now, according to you?
I think because of the high valuation, all these stocks are now in the last few months, they have not performed well. Actually, they are underperforming and cooling off. And these companies are doing business on a very thin margins. And now with the commodity cost is on the rise, the market participants are seriously wary about the future prospects with respect to the growth and, of course, the sales numbers too. So the valuation comfort is not there, and in fact, the earning pessimism is also coming up. So my sense is it is better to avoid, at least look for this quarter earnings and then take a call.
Okay, so that's the view coming in on all of these names. I think we've got Ayush calling us from Hyderabad. Ayush, a very good morning to you. What's your query about?
Hey, hi. My query is regarding Vikram Solar.
Okay.
So basically, the fundamentals for this company looks good. But the only concern is that they have very high pledge promoter holdings. So, and I'm planning for a long-term bet. So I wanted to know, would it be a good idea to invest in this or not?
Okay, all right. Saurabh, I'll come to you on this one. Vikram Solar, any view?
It is a relatively new listing, but the growth prospects is quite good for the company. On the valuation matrices, if you look, the profitability is growing at a good pace, and the valuations, if you look at the multiples, trading around 17 times to trailing earnings and about twice to book value, looks quite comforting. If you really have a long-term view, then you can buy in a staggered manner.
Buy in a staggered manner on Vikram Solar is what Saurabh recommends, but viewers as well as Saurabh and Gaurav, it's now time for the rapid fire round in this edition of Ask Profit. You both know the drill. The first question coming in now on Colgate Palmolive, bought at 2180, Gaurav, by Lalita. She wants to know, what should she hold, sell or average down now?
Would be the stop at 1850. Consider booking around 2050, 2100.
Okay, the next one is on Bellrise. Happy Mohanty from Bhubaneswar is asking this question, Gaurav. He wants to know if this is the right time to invest into this counter. Your view?
The stock is still at the top. Wait for a dip close to 185, then enter.
Rajiv from Delhi has bought into GAIL at roughly around 149 since June 2025. Saurabh, what should he do with the counter now?
I think it would be prudent to exit.
Asian Paints is the other one. Sai from Hyderabad wants to know the ideal price range to kind of invest into this counter from a long-term perspective. Saurabh, your view on this one?
Can't tell you price range, but yes, you can invest.
Sai Karthik from Dallas, Texas, who was a regular viewer, has been away from the show for a while now in terms of questions, but he wants to buy into Reliance Power now. Gaurav, would you recommend that trade for the next 6 months?
Prefer to pass it at the moment.
Okay, Nancy wants to know if she can go ahead and add any of the auto anch names in her portfolio from a 2-year perspective. Uno Minda, Sono, BLW, Madhusumi are some of the names that she's mentioned. Saurabh, any of these that you like, or any particular counter that you like in specific?
I think you can go with the Uno Minda and Sona BLW.
KSH International bought at 450 by Akshay. Saurabh, by any chance, do you cover this counter, now trading at 533?
Good to avoid.
Okay, the next one is on CCL products, bought at the levels of 1074. Can I add more at the current levels? V. Murli from Bengaluru wants to know. Already holding 200 shares. Gaurav, review on the charts?
One of the finest performers in the FMCG space. Yes, can consider adding the position.
Soumya from Bangalore wants a view on Info Edge. Gaurav, he holding at 1354. Now at 985 odd levels, would you recommend to average down?
I would say utilize bounce to exit your position towards 1150.
Coforge, is it a good time to continue to hold or sell? 540 shares bought at the levels of 1235. Gaurav, your view on the charts?
See, from short-term perspective, counter rally towards 1400 is quite possible. Hold the position, take stop at 1150.
Okay.
Tata Chemicals bought at 666 by Mr. Bhalla, who is a regular viewer. He wants to know, Gaurav, if she should exit the counter now.
Wait for some more time. If the stock surpasses 335, then hold. Otherwise, take a stop at 315.
Okay, HAL bought at the levels of 5050. 1000 shares is bought. Siva from Amravati is holding. Wants to know 6 months view on this one. Gaurav, your view on the charts?
Yes, a bounce, further extension to this up move towards 4500 is possible. Hold.
Alright, okay, so that brings us to the end of course, the first rapid fire round. But viewers, it's time to limit to a very, very short break, but we'll be taking more questions on the other side, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
कुछ खास होने वाला है.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already, do start sending in your queries. You can also call us on the landline number that is flashing on the top of your screen. We still have Saurabh with us and now Ajit Mishra, SVP Research at Religare Broking, now joining in. Ajit, good morning. Welcome to the show. It's a Monday. You've come in at 11 and the market is down yet again. I think it's just a pattern that we've seen over the last 5 to 6 weeks. But do you think that the current levels on the benchmark now below 23,800, but is that the long-term support still, even though we continue to break it occasionally? Is that the level to watch out for?
Yeah, good morning, Puneet. So, Puneet, last week was phenomenal, means 6% kind of a gain for benchmark indices across sector participation. Today, again, we are slightly in the back foot. The gap that we had in crude is got filled, means from 103 to $92, something that crude had witnessed a dip, and again we are back to that area. So that's basically capping the sentiments. But the good part is that today, at least on the weekly expiry day, Nifty is trying to defend the 20 EMA mark, which is around 23,500 levels. So as long as we are maintaining this level, possibility of Nifty continuing with sideways to positive stance seems high. Because apart from the global factor, the earnings season has started and market is taking clue from that also. So rate sensitives are still holding strong after the initial downtick. So overall, bias looks sideways to positive, but yes, the upside seems capped also, means close to around 23,800 to 24,000. That would be the area where Nifty might face resistance in intraday trade today.
Resistance at that level, most certainly to watch out for today, according to Ajit. But let's go across to our caller for today now again from Kerala. Jijo has a stock query for us. Jijo, good morning. Welcome to the show. What's your query?
Good morning, team. My query is I am holding Sona BLW 1000 shares at the average of 462.
Okay.
Okay. So I know there was some issue with their management and all.
Right.
But I don't know it was still persist. But I need to know next level and for the long-term view.
Okay, a long-term view. So, got it. Well, you bought it at a correct level. You almost had gains of almost 1 lakh rupees at that. Have you been averaging down or did you buy it for the first time at that level?
Actually, I was holding from 500 something.
For 500, okay. So you averaged down. Okay.
I average, yeah.
Got it. Well, prudent in this case, Jijo. Let me go across to Saurabh. Now, Saurabh, on Sona BLW, we've seen today, of course, the EV move, ramping up the shares today, but largely has been a disappointing last few quarters. What would you recommend Jijo to do now?
I think he should hold for a long term because the stock has corrected and the valuations have also subsided, and now the EV play is looking good for the company. The company is doing quite a great job in this space and they have many products in this space. So I think going in the future, they will surely enjoy the growth going forward. So my take is a hold.
Okay, all right. The next one is coming in from Nivedita, who's writing us from Chennai. Wants to know if this is the right time to start buying Balu Forge at the current price and valuations, and this is from a long-term perspective. So I'll stick with you for this one. Your view on Balu Forge?
Not in coverage, won't be able to comment.
Okay, Ajit, any view on the charts for Balu Forge? Do you think these are the right levels to kind of, start making entry in staggered manner?
So Mahima, it's been almost like 2 years of sideways to negative trend, I would say. It means from 850 to 400, and now we are seeing gradual recovery. So yes, we are still very close to the lower band. So possibility of the stock inching towards 550, 560 seems high. So she can consider accumulating in staggered manner in this range of 400 to 450, and positionally for any fresh momentum, the stock should surpass this level of 550. Then only we'll say that the corrective phase has ended and the stock is set for the next leg of the up move. So during this corrective phase, she can consider accumulating this stock in the mentioned levels.
Okay, all right. So that's the view coming in on Balu Forge. We've got our next caller, Hari Krishnan, I think, is calling us from Bengaluru. A very good morning to you. How can we help you today?
Madam, I am Hari Krishna. I am from Hyderabad, madam.
Okay.
Madam,
you're from Hyderabad.
Yes, madam. I have Tumble fertilizers share from at 880 at the price of 471, madam.
Okay.
Is it hold or exit, madam?
Okay. What is the time horizon that you're looking at?
Madam?
What is the time horizon that you're looking at to continue to hold this counter?
Oh, 1 month, madam.
1 month, okay. All right, Ajit, I'll stick with you for this one. Tumble Fertilizers, what are the charts indicating for the next 1 month? His buying price is 471. The stock is currently trading at 450.
Yeah, so Mahima, what we are seeing that after this sharp correction from the record highs, it's been almost like 4-5 months of consolidation in this span, 475 to 400. So which is closer to its the upper band is around its buying price also. At present, indications are mixed, means because after retesting its long-term averages, we are seeing again the stock is witnessing a bit of a profit taking. The good part is that the volume is missing during this corrective phase. So as of now, it's a hold, means 425 is the area basically where we have the immediate support placed. But for fresh momentum or any kind of up move, we need a decisive close above 475. That's the long-term moving average. So the moment we do that, probably 510, 520 is something the stock might attempt. So as of now, it's a hold with 525 as a stop loss.
Got that view, Ajit. And that's coming in on Tumble Fertilizers. Let's pull up another counter, Reliance Industries. And Pramod from Bengaluru has 37 shares of the company, bought at 1371. Now, Saurabh, he wants a 3 to 5 year view. The expectations for Q4 are bleak in terms of at least revenue growth. But what would be your long-term view on the stock now?
Long-term view remains positive. I think it is a kind of a portfolio stock. Going forward, I think the carving out of subsidiary will be beneficial for the shareholders too. I think there will be value unlocking also. So from the long term, I think you must hold the stock.
Okay, all right. Attractive buying price, to say the least, I think. Definitely sitting on good profits. But moving on to the next one, Pramod is writing us from Bengaluru. Sorry, this question is already done. The next one, I think we have a caller. Avi is calling us all the way from Australia. Avi, how can we help you? What's your query about?
Hi, good morning to all of you.
Good morning.
So I have got 1,000 shares of Senco Gold bought at 284 rupees. So I want to hold it for 1 year. So what could be the target?
Okay, got your question, Avi. I'll stick with Saurabh for this one. Saurabh, he is sitting on profits of around 38,000 odd rupees. Would you recommend him to continue to hold Senco Gold for the next 1 year and a rough estimate of target price if you can give?
I think it will be difficult to give a target price, but yes, the stocks, many jewelry stocks have corrected a lot when the prices were going up, gold prices were going up. And now with the cooling of prices and the business updates which are coming from the jewelers, which are looking good. I think this quarter also the Akshaya Tritiya is coming up. The expectation is that the company like Senco Gold will do good business. So in my opinion, with the valuation subsided, the expectation of a good growth coming in because of the now the price are oscillating, because the gold prices are oscillating in a range. I think the scene look optimistic from the investment point of view. I think he should hold for 1 year.
Hold for 1 year on Senco Gold is what Saurabh recommends. But the next question coming in on Pace Digitech, it's a recent listing in the EPC space, but Kiran wants to enter the stock now. Would you recommend that, Ajit? I know it's a recent listing, but any view on the stock now?
So Puneet, the trend looks negative, means the stock has made multiple attempts to reclaim at least the short-term moving average, but on every attempt we saw that the selling pressure re-emerges. So again, we are seeing a similar attempt. So let the stock stabilize above 160-65 levels decisively, then only you can consider for a short-term rebound. But in case if somebody is having any existing position, 150 on the closing basis should be the stop.
Okay, Inox India is the next one. Srikar from Hyderabad wants to know the right level to enter into this counter. Ajit, I'll stick with you for this one. Inox India, what are you seeing on the charts?
So my very swift move in the last two trading session, means from 1220 to 1400. The volumes are very strong. We are inching towards the record highs. So tone looks positive, but after the sharp surge, I feel that any dip toward, let's say, 1360, 1340 zone, that's a good area to look for fresh buying. And basis the previous consolidation range, probably around 1520 to 1580, position should be your target zone. For the interim, stop should be at 1220.
The next question coming in is on Hyundai Motor India. Now, a viewer, Animesh from Kuala Lumpur, is writing to us, and he's bought it or was allotted shares at 1960. Stock's trading at 1765, but look at the 1-year chart and the 2-year chart of where it was listed back in October of 24. Now, Saurabh, we've seen 2 consecutive years of decline for the company in the domestic market in terms of growth, now slipped to number 4 in terms of market share as well. So not a lot that's going on for the counter now, and hence probably we've seen that correction all the way up from 2,800 rupees per share. What would be your recommendation now? Is it largely being priced in all the negatives? Should he continue to hold? What would be your view?
I think it was a bit quite negative for the investors that the company has now come to the 4th position, and now with the commodity cost climbing up, there is an apprehension that there can be a case of margin erosion, because the buying power lies with the consumer, not with the OEMs. They'll not be able to pass on the entire hike because of the competition and the languishing sales. So there will be added margin pressure and the profitability will be further lower. So that is why I think there has been a correction which has been witnessed. I think it is better to get out.
Okay, so that's the view coming in on Hyundai, and better to get out is the view coming in from Saurabh. The next one is coming in on CleanMax. Our viewer Srikanth from Bengaluru is asking, I hope you've not taken this question.
No, we haven't.
Is asking this question, wants to know if this is the right time to make an investment into this counter. Saurabh, any view on this one?
Won't be able to comment.
Ajit, enough data on the charts to give a perspective?
So very limited data,
Yeah.
but basis what we are seeing on the price action front means 920, 930, the hurdle zone, and downside this stock made a base means attempt was there, means around 800, 810. So it's basically a recovery in case if you are, if the view is short term, you can continue to stay put. 870 should be your strict stop, in the interim. 940, 960, the record high zone should be the area where one can consider booking profits.
Probably buzzing on the back of that note also from HSBC initiating coverage along with Acme Solar, which we took at the start of the show. But another caller from Hyderabad, Vidya, has a stock query for us. Vidya, good morning. Welcome to the show. What's your query?
Good morning, all of you. I'm holding 150 shares of RK Forge, bought at the price of 530 rupees. I want to know the perspective for 2 to 3 months. What could be it up to maximum level?
Got it. Well, Ajit, on RK Forging, any view for the next 3 months?
So Vidya has done one thing good, that after almost 50% of the retracement, she bought it, and now at least the downside seems capped. Means the stock is still been oscillating in this band of around 450 to 600, but the damage seems capped. And in case if the stock manages to cross the previous hurdle around 580, 600 zone, then probably we may see a next leg of the recovery, which can help the stock to inch towards 650, 680 in the near future. So she can continue to hold her long position with the 480 as a closing stop loss.
Okay, all right. The next query is coming in on Cupid. Khurshid from Delhi is asking this. He's got 758 shares bought at the levels of 90 rupees. Wants to know whether he can continue to hold, add more, or maybe sell at the current levels. Saurabh, he wants to know the fundamental view on this one. I think the last that it touched 104, if I'm not wrong, on 1st Jan or something, which was the highest point. Since then, it's come down a tad bit. Your overall view on this one?
I think in my opinion, the valuation side, it is quite expensive, trading 30 times to book value and 150 times to its trailing earning. Moreover, if you look at the latest earnings, there has been a degrowth. My opinion is better to get rid of.
Get rid of Cupid, what Saurabh recommends. The next question coming in is on Electra Green Tech. Now, a viewer, from Kerala actually is bought into this counter at 1651. Stock's trading at 1219 now. But Saurabh, what would you recommend? He's holding 21 shares. We've seen a management change happen over the last 2 to 3 quarters, and some salience come in that sense in terms of production being increased. But is it too expensive at this point of time? What would you recommend?
I think after the correction, it is not that expensive, but yes, there has been markets. Investors want to see the performance on the operational side, the operations. I mean, on the sales and the profitability side, which is still missing. I think it is better to wait for a quarter or two.
Okay, the next one is on BSE. Likhit has bought I think 40 is the quantity that he has, and he's sitting on profits of around 37%. He's bought at the levels of 2410. Wants to know if he can continue to hold or sell at the current levels and book profit. Ajit, your view on the charts for BSE, further upside is something that you can expect?
So, Mahima, we have only a handful of stocks which are trading at the record highs, despite the overall negativity that we are seeing in the market. So, definitely he should, in case if the view is even for short term. The momentum is on positive side. Yes, we may see a breather after making a new record high, but basis the current structure, possibility of stock testing 3,500 seems quite high. So around that area, he may consider booking at least partial profit. In the interim, 3120, that should be his stop loss.
2120 to watch out for on BSE, at least for the stop loss. But let's go across to another caller from Hyderabad. Supriya has a stock query for us. Supriya, good morning. Welcome to the show. What's your question?
Good morning, sir. Sir, I have IRB infra and 10,000 in quantity and 23 we have bought it.
Okay.
And whether to hold or dispose, sir?
And will this be a long-term or a short-term bet, Supriya?
If it is long term, what will be the situation? Or it is a short term, what will be the situation?
So can you hold it for more than a year, Supriya?
Yeah, sir.
Okay, got it. Saurabh, we've seen a decent portfolio being built by RB Infra, but the return ratios are missing from there. But any view on what you can offer, Supriya, and in terms of positioning, sizing as well?
I think view remains negative on the IRB Infra. From my take, is better to get out.
Okay. All right. So that's the view coming in on IRB Infra. The next one is coming in from K. Parthasarthi, who's writing us from Chennai, asking about Gujarat People. He's holding 100 shares, bought at the levels of 200. Wants to know whether to hold, add, or sell this counter. Ajit, your view on the charts for this one?
Again, Mahima, very strong structure. Stock at record highs, consolidation range breakout. So everything looks conducive for this prevailing trend to continue. Basis the past consolidation, probably around 320, 330 is something that the stock might attempt in the next leg of the up move. So with stop at 270, you can continue to stay long.
Gujarat Power is the next stock query that we're taking from K. Okay, you got this query covered. Got it. The next one, it's from Jyoti CNC. Stocks down 11 to 12% in trade today. On the back of a corporate restructuring, and French authorities actually taking some action against one of its international subsidiaries, down 13% now as we speak. And our viewer wants to know, Deepak wants to know if it's a good time for fresh entry. And we always get such questions on days when the stock's been tanking because of any particular update. But Saurabh, do you cover this counter by any chance? If not today's update, just what would you suggest Deepak to do?
I think from the last 1 year, the stock has been underperforming. It is cooling. It is coming down only. And when the corporate governance issue comes up, I think it is better to wait till you get clarity. My sense is better to avoid.
Okay, the next one is coming in on Ipca Labs. This is from Angad, who's writing us from Indore, asking whether this is the right time to make an entry into this one from a medium-term perspective. Ajit, do you have a view on this one on the charts?
So, Mahima, very tight range consolidation around the record highs. But since his view is medium term, definitely he can consider on the short term basis, the stock is hovering around its long term averages. So the downside seems capped. And anyways, basis the prevailing consolidation also, 1380, 1350 is a very strong base area. So considering that, it's a good area to accumulate. But for fresh momentum, 1620 is the barrier. So once we cross that, then probably we may see a next leg of the up move. So we can start accumulating even at current levels.
Got that view, Ajit. So that's coming in now on Ipca Labs. Let's go across, take our next caller from Hyderabad, and Shweta has a stock query for us. Shweta, good morning. Welcome to the show. What's your query?
Hi, very good morning, Sunit. I'm holding 361 shares at 1091 price. I would like to know, can I add more at these levels, or should I, because I'm holding Nuvama Wealth and Nifty as well. So should I add 361 at these levels, or should I exit and add Nuvama Wealth or this one?
Sorry,
Yeah,
did you
Nippon
say,
AMC, yeah.
Shweta, that you're also holding some other company apart from 361 in that same space?
Yeah.
Which one is that?
I'm holding Nuvama Wealth and Nippon AMC also.
Okay. Nuvama Wealth and Nippon AMC. Got it. And will this be a long-term bet, Shweta, more than a year?
Yeah, it will be a long-term bet, yeah.
Got it. Well, Saurabh, on 361, company has performed well, but any view that you can offer Shweta at this point of time? She's holding shares at 1091, also has Nuvama Wealth and Nippon AMC.
I think if you have a long-term horizon more than 3 years, then I think it would be prudent to hold.
Okay, all right. So that's the view coming in on 361. Vam, it's time for our second rapid fire now. Around Saurabh as well as Ajit, you both know the drill. Try to keep your answers as short as possible. Chandra is asking the next question, which is on Newgen Software. Wants to know from a long-term view, can he consider this counter right now? Saurabh, your view?
Avoid.
PK is holding JM Financial at 133, Ajit. What should he do with his 350 shares now?
Hold with stop at 125, 145, 150 target area.
Ola Electric bought at the levels of 57, 2695 is the quantity. Maddie wants to know whether he can continue to hold. It did slightly play catch up in the last couple of trading sessions, but Ajit, your view on the charts?
Looks overbought, consolidation likely, maintain stop at 32 and around 46, 48 reevaluate.
Okay.
The next one coming in, we've taken IRB for today's session, but on Sterlite Tech, bought at 190, Ajit, what would be your view for Raghuram?
Stertech looks sideways to me. If you have existing position, maintain stop at 4% away from the current area and avoid fresh buying.
Sirka Paints bought at the levels of 319. From a short-term perspective, hold or sell? Prashant, I think, wants to know he's holding 100 shares. Ajit, your view on the charts?
Exit.
Shivani is bought and holding JK Paper, Ajit, bought at 430. Should she continue to hold for an upside back to a buying price, or should she exit now?
Strong hurdle at 360, maintain stop at 335 to hold.
Exide Industries, is this a good time to maybe make an entry from a long-term perspective, Saurabh?
Avoid.
The next one coming in, it's on KPI Green, bought at 380 by Manul. Ajit, is the sideways momentum largely behind it now?
No, consolidation is still going. 430 is the hurdle. So for fresh buying, wait for a close above this level.
Okay, Capacite Infra is the next one. Saurabh, any view on the fundamental side? It's a 1900 crore market cap company.
Avoid.
Tata Motors PV bought at 450. Is it prudent to average down now, Saurabh?
Don't average.
Okay, the next one is coming on Sterlite Tech. Kishore from Mumbai wants to know whether to hold, sell, add more from a 6 months perspective. Ajit, your view?
Like what I've shared earlier, avoid or maintain 4% as a stop loss for existing position.
Okay.
Krupesh is holding 300 shares of NTPC Green, bought at 108 near the IPO price. Saurabh, stock's up today, but should he continue to hold?
Hold for long term.
IRCTC view from a long-term perspective. Our viewer Harish is holding 32 stocks at the levels of 825. Saurabh?
Looks still expensive. Better to get out.
Is this a good entry point for Sabita to enter Shakti Pumps at this level here, Ajit?
Fresh buying can be done, but with strict stop at 450.
Okay, Procter & Gamble is the next one that Suresh has a query on from a 1 to 3 year perspective. Is this the right time to make an entry from an FMCG point of view? Saurabh, your view?
Yes, you can do.
Tarun Agarwal from Ranchi holds 1,500 shares of Vedanta at 470. He wants to add more now. Saurabh, would it be your recommendation?
You can add.
BPCL from a long-term perspective, Manoj wants to know if he can continue to hold. He's got 808 shares at the levels of 328. Saurabh, your view?
As of now, concerns are real. Better to avoid.
Within the water space, water sector, EMS, Enviro, Viatech, Vavag. What's a better pick, Saurabh, for Suman?
Viatech, Vavag.
Got it. Well, that's the end of the rapid fire as well as this edition of Fast Profit. Ajit as well as Saurabh, thanks so much for helping us solve the 57 queries that we have in the last 1 hour. Appreciate your inputs. But viewers, that's all the time we have on this edition of Ask Profit. Stay tuned. A lot more action on the other side with KYC and hopefully a market recovery in the second half. But a lot more stock related queries at 2 p.m. for afternoon edition of Ask Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ बड़ा होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's Saturday? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where we get you the hottest companies, where we discuss their key growth outlooks and where does the alpha lie. And I get you all of this and much more in this show. But before that, I would like to give you some hints about the company which we are going to talk about today. It's a very interesting company. You have heard about textile companies, but have you heard about the platform textile company? What this is all about? It'll be pretty much interesting to know about it. The second hint I would like to give you, and there's a lot of interest in this, the company recently won a 450 crore order coming in from a US retailer. We'll give you more details on that. The third hint I would like to give you, try to get it by now. It's backed by Enam Group. Of course, Vallabh Bhansali, the market ace investor, is there. He's heading this group that is promoted entity and also backed by Mukul Agarwal. So ACE investors are betting on this stock. What this company is all about, we'll give you that entire information. And it's received its highest ever volumes last week. That means something is brewing here. What it is, I would like to make you understand slowly. And the company in focus is PDS. This is the company I'm going to talk about, which we'll be discussing all throughout. And of course, what are the growth levers, and is the textile story of India changing or not? And if it is right at the center of it. Let's look at the company, why we are calling the company. Of course, the main large order win has come in, and what are the key updates about it? What are the key timelines we should be watching out for? And if you're a textile enthusiast, this is a very interesting company. So do pay attention to what I speak. The second reason why we are calling PDS is the global trends in outsourcing. Is the company benefiting from it? Is there a vendor consolidation happening? They are a big vendor, so they might be getting benefited as well. That's to put it in a very simplified manner. And this is the question to talk about the outsourcing. Is it changing? And remember, this is just not India focused. They have global solutions for it. So they have factories across the world. Now, Bangladesh impact, that is a big question, especially regarding the Indian textile story. How much of that has changed? And are we navigating this uncertainty? And if yes, what is the company doing on that? That's the question we'll be answering. And the growth outlook for the numbers for FY27. This type of business models generally have a very lower margin side, so we should be looking at the revenue and of course the order book as well. Apart from that, any acquisition plans? Remember, they had done a QIP. Most of the funds, you could say, have been deployed, but there is a certain amount of funds which are not yet deployed, and we might see some acquisitions happening. They recently did a domestic company's acquisition as well. But to give the entire perspective, we'll be joined by Sanjay Jain. He's the group CEO at PDS, where Sanjay will explain us about the company, the growth outlooks, and what are the new developments which are happening. But टेक्सटाइल की बात कर ली, टेक्सटाइल की प्लेटफॉर्म की कंपनी की बात कर ली, लेकिन पीडीएस है क्या? What is PDS all about? For the first time viewers and prospective investors, this is a textile platform company sourcing and manufacturing solutions. So there's a lot of things at the back end, which the clothes which we wear, a lot of back end work is there, and that back end work in a platform is done by a company called PDS. Now this is a 450 crore order from the US retailer. Despite so much happening global trade, company has got a very big order. Now let's see how much of that order fructifies and the timing. And remember, ACE investors are there in the stock, backed by Enam Group and Mukul Agrawal as well. So definitely the Dalal Street superstars have given a thumbs up to the company, and recently the company acquired 55% stake in Knit Gallery. This is an Indian company, so they are looking at the Indian manufacturing setup as well. But let's get into more details. What the order book currently stands. These are the Q3 operational numbers which we have taken. Remember, Q4, the numbers are not out yet, so we'll definitely be talking a conversation till Q3 only in terms of numbers. Order book stands at roughly 5,200 odd crore rupees. We can see some minor improvement coming in. GMV, which is nothing but your gross merchandise value, that has clocked in a 7% growth of roughly 15,000 crore rupees. So the operational parameters as of now, they look decent as you compare that with the volatility in the global textile space. But let's look at the numbers as well. The net working capital is down from 17 days to just 7 days in 9 months. And of course, seeing the current situation, this is commendable effort by the company. Apart from that, gross margins that have expanded by 45 basis points at around 21%. And these numbers I have taken is for the first 9 months of the fiscal year. Apart from the Q3 operational numbers, the net debt that has done well, that's reduced from 374 crore rupees to 70 crore rupees for the month of December. Remember, there was the QIP proceeds were also there, and a large subsidiary debt was reduced as well. So these are the important operational numbers which we will be talking about. But let's see the geography-wise breakup, how things are panning out. Largely, they're having exposure in UK. Around 43% of revenue is there, but it's evenly balanced. If you compare them with the Europe market and the Americas market, a very small exposure is there in the Middle East and the Asian markets. But let's see which products the overall revenue breakup is looking like. For men's, it's around 35%. It's almost, you could say, the same number for women, also 35% each. And for the children's segment, that's around 24%, and around technical textiles, if we talk about it, that's roughly 6%. So you could say that the distribution is equal when it comes to the geography and even the product as well. So these are the important category-wise revenue breakup which we have seen. But why is the stock in focus? What are the key positive triggers for it? That is what we will be talking about it. And of course, there are some important views when we talk about it. If you could just show what's there next for us, and then we'll get that clarity and the rating parameters. This is what I'm talking about. Income statement, balance sheet, cash flow. This is what we'll be judging the company on. In terms of valuation, so we'll compare that with the company itself, because there is no apple to apple comparison for this company. So we will be looking at the historical data, and apart from that, shareholding in street cred over a period of time, how much it has changed, be it FIs, DIs, we'll get you all that information. Peer analysis is a very interesting analysis. I have taken some help from PPFS Investment, where I'll explain you the entire textile value chain and where does PDS stand in that, and the outlook as well will be very much important. Let's talk about income statement first, how things are panning out. And largely remember, these margins which you see, this will always be around that 4 to 5% portion because of the inherent business nature which the company has. Largely we see the 3-year CAGR numbers for EBITDA and revenue ranging between 13 to 15 odd percent. Nothing much to look at. It's a kind of a stable model the way the numbers are looking at. Let's see the Q3 numbers, and we see largely flattish growth has been there. The margin trajectory is ranging between that 3.8 to 4% mark, and that has been done since its IPO over the last 5 to 6 years. So that is stable. That's the inherent nature of the business model. Yes, there is no volatility, and that's a good portion about that. And looking at the numbers also, slight bump up coming in the revenue numbers and a slight dip in the net profit numbers, but net nothing much there in terms of volatility. So I'll be giving this a neutral rating. It's not that great and neither that bad. So that's the performance levels for the income statement. Let's also talk about the balance sheet, and you must be looking at the higher levels of debt, but these numbers are only till FY25. But if you see the debt reduction which has taken place after the QIP which the company had done, now that net debt level actually comes down. It goes below the 80 crore mark. Remember, around 90 crores was used for an acquisition for a domestic manufacturing company in India as well, and despite that, the debt levels are on the lower side. Cash bank balance is still healthy at around 737 crore rupees, and remember, it's a high working capital business as well. So overall balance sheet is strong, so I'll give a thumbs up when it comes to the overall balance sheet. But let's look at the cash flow, how things work out, and largely they have private players. So we can see these are some stable characteristics when it comes to their billings, and we had seen the net working capital days also coming down. One of the reasons for that is an improvement in this net cash flows as well. It's roughly around 100 crores in the positive. I've just taken the FY25 number, and overall the conversion also looks decent when you compare that cash flow, especially the operating cash flows with the PAT. So net it's still positive, but I would like to give it a neutral rating because cash flow from operations might be changing a little bit here there, because investing and financing activities are also something which the company is looking at. And remember, around 100 odd crore rupees is still not deployed for further inorganic acquisitions. So it's a neutral rating when it comes to the cash flow segment. But one interesting point I would like to point out is the valuations front. The last 12 months PE ratio, we see the 5-year peak had gone to 58 times. I took an average of it, it's 28 times. So definitely from its peak, it has corrected. But from the 5-year average, it's still on the premium. It's around 38 times it's currently trading at. And when you talk about a textile company or a textile related company, they don't get these valuations. They get something between 12 to 20. But of course, we have seen a good up move in certain textile pockets over the last 3 to 4 months. FTAs are also there. But this is a platform company. It enjoys a higher ROCE because it is, you could say, asset light, and other ancillary activities are there. So net, I would still give a neutral rating when it comes to valuations front. So we spoke about valuations. Now we'll talk about the shareholding, how things have moved. And of course, when there was a QIP, the promoter stake will go down, and from 66% it will come down to 61 odd percent. FIs have slightly sold off from 4% to 3%, but one thing which is nice, the QIP is a good lapping up coming in from the DIs. Their stake went up from 1% to 6% in this company, and we saw good positions coming up from the star investors, and definitely we saw the highest volumes last week as well. Those numbers definitely are not there in the March quarter numbers, but we are going to see some big positions happening, and already investors are there. So shareholding is a strong thumbs up when it comes for PDS. But apart from shareholding, let's talk about the stock price movement. Kitna paisa bana, kitna paisa nahi bana. In the short term, from 2026 lows, just 4 or 5 trading sessions, stock is up 16%. But the stock has taken a lot of patience for the long-term investors. Last 1 year, the stock is down 28%. But concern is still there. For the last 2 years, the stock hasn't done much. It's down 36%. So if you're a long-term investor, this stock is testing your patience. Short-term, congratulations to you. But net, it is still neutral. So the company needs to show whether it's at inflection point or not. And if it's there, is there any alpha there or not? So that's the street cred for you. We've given a neutral rating, but ROC profile, this is one of my favorite research which I have done. I've taken a little bit of help from the analysts at PPFS. PDS is in a sourcing category, and their numbers, the ROC numbers which I talk about, that is at the highest in the industry. That's around 30 to 40% in the listed space. This is the opportunity which you get. So this is the first one, but let's explain you a little bit about the peers also. Garware Technicals is a technical textile company. Their portfolio around 25% plus ROC model comes in, and if you get into the lower side, the Infant, the Kitex and the SP Apparel, they give you the ROCs between 20 to 25%. And talk about integrated player, that's around KPR and Arvind, that moves around 18 to 20%. But anything after that in the textile comes below that 15% mark. And that's where the question arises for the investors. We have, of course, Gokul Das, they are into garmenting, that also ranges between 15 to 20%. So this is a very important ROC profile. If you can take a screenshot, share with your friends, or note it down for your further future reference. So net, it's a strong thumbs up when it comes to the ROC profile. Last one is the Outlook. Outlook, they have a very strong established UK customer relations, and that is why the FTA has come up. So they'll be in a very strong position to get further orders. They are pursuing strategic acquisitions. Still the funds are left from the QIP fundraise, and that's what we'll be watching out for. And also there's a revised labor codes for India and Bangladesh. Will that impact their costing? That is something to watch out for. And yes, slightly there would be an impact. The Bangladesh uncertainty, that needs to be addressed. Now, how will that happen? Will it be via diversification of clients, diversification of the geographical footprint, or is there something else in store? That's the main question to be asked regarding the stock. But net, the outlook is strong, and I'll give a strong thumbs up for it. But let's revise all the ratings which we have discussed. What's the total numbers looking like? And largely, let's just pull out the KYC final ratings, please, to give us our audience the entire view. If you could just show the KYC ratings. Yeah. Right, yes. So we have income statement and cash flow, which is decent. I've given a neutral rating. Balance sheet is strong. Debt reduction has been there. And the valuations, that's also largely, you could say, neutral. It's not very cheap as of now. There has been a little bit of run up, so we need to see. Apart from that, let's see the shareholding and street cred, where the action is there. Shareholding and peer analysis, company stands out, and so in the outlook. So net, overall, I have given this company a KYC rating of almost 6 out of 8. That's slightly on the higher side of the average numbers which we generally give. And this is the company which we'll talk about more. But to give it more perspective, we'll be joined in by Sanjay Jain. He's the group CEO at PDS, and he has, of course, more than 3 decades of experience and across a lot of conglomerates. Good afternoon, Sanjay. It's always a pleasure to talk with you. But this 450 crore order, that's a big order coming in for PDS after a long time. Just give us a little bit of details about it, and what's the contract size, or you could say the contract time for it.
Hi, Sharad. Morning. Thank you for having me over. This is a contract under our business offering sourcing as a service. It's a US-based retailer which is having an annual turnover of $10 billion plus. So for their sourcing from China, they have given us this order wherein their current purchasing that they are doing approximately 450 crore is what we are expected to handle in year one, wherein they would the suppliers would keep directly billing to the customer, but normally retailers have their administrative offices in the sourcing location. So all that would be taken over by us. So in a way, the client saves the costs that they were incurring for managing these suppliers, which we would be doing. And gradually, this business, given the large size of the retailer, as I said, $10 billion plus. So this is a beginning. Our focus in the first year and second year should be on performance. So as we deliver the client expectation, then we believe this can meaningfully scale up. But also importantly, North America last 18 months has been a growth market that we have picked up. So far, our wins there with clients have been design-led sourcing, which typically is a 3 months, 6 months, 9 months order cycle, whereas sourcing as a service is a long-term 4 to 5 year contract. So this, we believe, is another foot forward in terms of our relationship building with North American customers.
Right. Sanjay, apart from this, the way things are changing in the industry, and over the last 6 to 12 months, there has been a big consolidation as well. Company has also been, quite vocal about it. Currently, is there this consolidation continuing in the industry? And if yes, where does the PDS stand in this?
See, the last 12, 18 months have been quite turbulent times. I think we all have witnessed the war situation, Ukraine and Russia, leading to high inflation, customer sentiment getting impacted. Then there have been geopolitical developments. And let's not forget, prior to this was China plus one strategy. And the last was a tariff situation. The tariff, changes, rampant changes that happened. And now recently the war situation. So our industry have gone through a lot, trying to grapple with one change or the other. And the other thing is now is that on a positive side, there have been FTAs signed for Indian manufacturers with respect to UK market, with respect to European market. The government is also pursuing a very structured agenda. So it's been a balanced, development set of things. But while the positive developments on FTA and the structural initiative span out over 2 year, 3 year horizon, the negative factors, in terms of the inflation, in terms of the tariffs, they all have immediate impact. So I would say we've been all as an industry grappling with it, and we are just hoping that things should remain stable. As soon as things are stable, one is able to plan for medium to long term. But I would say 1 or 2 more quarters, we got to continue to be patient about spanning out of all these negative factors, and then hopefully it should start looking up. So I guess we're hopefully, no more bad news coming from any part of the world, hopefully nearing the end of this, in terms of whatever has been happening.
So that means, Sanjay, we need 1 or 2 more quarters to actually give the outlook for FY27. You want to say that? Because of course, 1 or 2 quarters, there might be an issue, and it's of course normal for that. It's happening for the entire industry. But for PDS, in focus, your business, the way things you are firefighting, there is some diversification at play also from Bangladesh. So where does the company stand for the first half of FY27? Will it be a bit different than the second half of FY27?
See, I spoke with respect to what happened to the industry. At PDS, there is some uniqueness, the way we have built our model. On the front end, we are well diversified with UK, Europe being about 70% of our markets, and then now North America gradually gaining traction in our overall portfolio at about 17%. So we are well diversified. We are well placed to benefit from the FTAs which are unfolding. At the same time, well diversified across the geographies. Even on the sourcing side, our concentration is not with respect to 1 or 2 factories in one part of the world. We are sourcing from Bangladesh, Sri Lanka, India, China, Turkey, Vietnam. So that allows us an inbuilt flexibility to navigate these challenges, much better as compared to any other company. Having said that, I think we are walking into the year 26-27 on a caution note. And as I said, things are a bit turbulent. But for us to have a modest growth, is something that we feel very positive. A low single-digit growth at this stage looks doable for the entire year. Maybe 1 or 2 quarters down the line, if things start looking bright, we may like to revisit. But I think our diversified model should enable us have a low single-digit growth even in these turbulent times.
Okay, so turbulent times, but definitely a growth would be there, at least in the low single digits. But clarity might come in the first or the second quarter. We need to wait and watch. Nicely said, Sanjay. 3 important areas we asked about, but I just want to get into Bangladesh a little bit more. How much things have changed since the last third quarter update, which you had spoken about? There was the diversification at play, and we are still kind of, there's a fog around this space regarding Bangladesh, China, and India. How much of that has changed, or this diversification is still at play?
I think it catches far more attention, as compared to how stable the on-ground realities are. PDS has 2 factories in Bangladesh, and there have been 1 or 2 episodes, of geopolitical disturbance on the ground in Bangladesh. But our factories have been pretty much running stable. The order outlook has been positive, barring a day or 2 getting impacted in terms of production. The factories which are owned by PDS and the factories with whom we partner with have been pretty much running stable. And so therefore, we haven't really got impacted in terms of, what happened in Bangladesh. But having said that, I think while on one hand, we are running stable set of operation in Bangladesh, we are focused more and more on, for example, in net calorie acquisition that we did in Tirupur, the FTAs that India signed. So we believe as we scale up, we could source more and more from India. That is number 1. Number 2, Vietnam, we have a lot of focus for catering to our clients in US. And lastly, besides the tariff situation in between the 2 countries, beside the geopolitical situation, the proximity to the consumption market to reduce the lead times. So therefore, in our overall global sourcing footprint, Egypt and Latin America have become equally important now, because from Egypt to Europe and Egypt to US, and likewise from Latin America to US, there is much lesser lead time. So I think as a result, Bangladesh for us has been stable, but we are increasingly focusing on sourcing from other markets. Therefore, on the whole, if I draw a picture 2 years, 3 years down the line, our absolute procurement from Bangladesh should not go down. It would keep gradually growing up. But from the other geographies, what we are sourcing would actually go at a much faster pace.
Okay, so that's important. Egypt, LATAM, that's something which the focus is. Bangladesh remains stable. But let's talk about the acquisition plans. There was an Indian acquisition also, and I presume your QIP proceeds are not used fully yet. You are looking at further acquisitions. Am I right?
See, at this stage, net calorie acquisition is almost about a year or so. And I think as we look back, it's turning out to be a step in the right direction. Especially the FTAs are enabling us to showcase the factory ownership to our UK and Europe-based customers, and therefore win more business. I think for now, for the next 2-3 quarters, we are going to focus on what we have in hand. For North America, we acquired a stake in a company, held by Michael Lee, so that we can use his expertise to fast forward North American market. For the next 6 to 9 months, allow us to stay focused on what we spend money on and derive more, benefit out of it. And our QIP money that we have, we are ensuring that in compliance with laws of land and the objects, we will be doing the needful. But we're not wanting to haste up spending money given the uncertainty. And most importantly, given wherever we have spent capital, committed capital, we want to make sure that we get the desired benefits out of it.
Sure. So definitely uncertainty is there. So you can keep the QIP proceedings within already the investments which have been done, be it globally or India, their fruits of, would be also coming in. But apart from this acquisition front and how the company is positioned itself, we spoke a little bit about financials also, and of course, how things are panning out. Any new trends in the industry, in the outsourcing, which we are talking about, any new industry trends which have come up apart from what we have discussed on the vendor consolidation front and maybe in the new geographies. If you could just share with us, because I know you have a good exposure in the UK and the global markets for the sources as well. So Sanjay, give us a feel of how the new trends are coming in your industry.
So a couple of things there. I think there has been a consolidation underway of the retail sector. The smaller companies are giving way or getting merged into larger companies. That's number one. So therefore, as we enjoy strong relationships with our customers in UK, the customers are growing in size because of the consolidation. That is number one. Secondly, PDS has been able to get larger share of wallet from these customers because they have, on one hand, successfully seeing the relationship with PDS over the last few years in design-led sourcing in apparel. Now our relationship is going beyond apparel into home and general merchandise. So therefore, from a retail industry perspective, there is more focused on now outsourcing categories beyond apparel as well. Thirdly, we talked about in the beginning, the contract that we got from our US-based customer is the offering of sourcing as a service. The retailers, especially wherein they are owned by private equities, they believe that the retailer should focus on more core business. Core here means customer interface, visual merchandise, loyalty programs, in-store experience. Anything in the backyard can be handled by credible counterparties like PDS or similar such companies. So the retailers are willing to let go more and more an internal part of the P&L to third parties. That's an emerging trend as well, which means we get an opportunity to participate more. And lastly, and very importantly, I think the AI, is being embraced increasingly by retailer, especially on the design front. And as one is able to use AI for an effective designing, therefore effective sampling, as a result, the effectiveness of what is getting bought.
Right, Sanjay, we are having a little bit of shortage of time, but you have given us the entire picture of the company and the industry going ahead. It's always a pleasure to talk with you and giving us new industry trends as well. Best of luck for the Q4 numbers as well. So that's the management of PDS we are talking about. They spoke about their 450 crore order, changing trends in the outsourcing and maybe the benefits which can come in, but they won't come immediate. There is a 1 or 2 quarter of lag as still there is some uncertainty in the market. So for stories like this, for companies like this, do tune into KYC and stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
कुछ बड़ा होने वाला है.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Nifty and Sensex retreat from their day's low but remain under pressure as geopolitical tension heightened in the Middle East. Broader markets mirror the benchmarks as most sectors trade under pressure today. Middle East slips back into danger mode. US military threatens to block maritime traffic in and out of Iranian ports, while Iran warns of dire consequences. Supply jitters send oil soaring above $104 a barrel. It's an NDTV Profit exclusive. India Inc. flags a fundraising roadblock. Companies are asking SEBI to revisit QIP pricing rules, arguing that floor prices based on historical averages are misaligned with the current market levels. Sources say the government has rolled out Draft Cafe 2027 norms, offering a softer phased glide path for fuel efficiency. The proposal gives automakers breathing space while keeping a strong policy push for EVs and hybrid intact. Hello and welcome. You're tuned into Markets at 12. I'm Nisha Podar. Let's take a quick look at the markets at this particular hour. Yes, there has been some bit of recovery in the market from the gap down opening that we saw because of the escalation of Middle East tension. No progress in the negotiation between US and Iran in Islamabad. Crude prices rise and weakness in the Asian markets. All four factors really spell trouble for the Indian markets, but we have seen a fair bit of recovery coming in, but a very, very consistent recovery in the market today. Let's also take a look at what is really contributing to Nifty 50. Well, it's the private public sector enterprise NTPC, which is the top gainer with hardly any, it's a minuscule contribution. HDFC Life, Adani Enterprises, Tata Motors, PV are some of the ones which are really showing a green tinge, but the rest of the market is really showing deep cuts in terms of the performance and the pressure that is really coming in the overall market. HDFC Bank is the top loser along with SBI as well as Reliance Industries. Well, also taking a look at the banking space, well, Nifty Bank is underperforming Nifty 50 by a slight margin, and that's really notable. On the other hand, when we look at the sectoral performances, PSU banks and banking space are the biggest draggers in the market today. In the last couple of hours of trade, from being all sectors across the board sell-off, there has been buying that is seen in certain pockets, that is media as well as defense and energy space. And take a look at those particular three sectors which have really performed well. But I would also like to focus on one aspect, that renewable energy, EV as well as EV battery. That particular entire pocket is the one which is seeing some buying coming in, and that is also elevating the momentum in the market. Let me welcome on the show Nishal Maheshwari, market expert, joining in with his take. Nishal, of course, the jitteriness in the market is back. A large part of the recovery we had seen in the market in the last week, whether it's equity or money market or rupee, a little bit of that has been reversed because of de-escalation efforts being thwarted. How do you see the market? In fact, the volatility is really continuing, it seems.
Afternoon, Nisha, to you and your viewers. So I think this was expected to believe that this war is just going to get over basically with one discussion. I think that was, I think, a bit unexpected also. So I think this volatility will continue. But what we have to see now is basically, does any of the warring parties really gain anything out of it if they want to get back onto the attack front. So I do not see much reason for both the parties to actually continue this thing. I think they have made their positions clear in the first round of discussion. Obviously, everybody would come with the highest expectation, and then slowly I think things are going to work out. But I think that will take a bit of time, but the volatility will continue in the market.
So, Nishal, that's exactly the point that we have to harp on, that this volatility will continue for some time, as the market was really expecting that the negotiations will probably put an end to the war. That's really not going to happen, and the negotiations, as it were, between very large players, global countries, that really takes a very sensitive turn. Now, in this market, Nishal, there are a few pockets which are really doing well today, have seen buying coming in, especially from the renewable energy space, whether it be EV space also, EV batteries also along with it. The PSU sector, apart from the banks, the private sector, public sector enterprises, they've all been seeing some bit of buying along with defense. In your view, which are the sectors which are looking at better valuations and safe and a little more protected from the vagaries of the war, which can be seen for investment?
So I think you listed the sectors very well. There has been, so if I divide it between saying that what is looking cheap and what is the sectors to focus on, though it may not be cheap, I think you defined it pretty well. So the cheaper sectors are the banking side. I think banking and consumption, both of them are come off quite a bit, and I think it's sort of an investing zone. So private sector banks is what I like, and I think they are coming in very, very interesting valuations at this point in time. The sectors which are interesting from a thematic point of view, where the industry seems to be doing well, I think renewable energy. So energy as something, whether it is through renewable or whether it is through EVs, I think the whole energy space has become very interesting. And the other one which I think one should focus on is defense. So these are the 2 or 3 industries basically one should be focused on, because defense, largely because there is going to be consumption of defense products if this war continues. Otherwise also I think most countries would now want to actually up their investment into the defense side. So I think these 2 or 3 sectors looks interesting at the moment.
So Nishal, what is your view coming in on the IT sector after the big boy Tata Consultancy Services had announced their results, and those results have caused a little bit of bearishness about the AI thrust as well as the dollar revenue thrust for the Indian top giants from the IT space. So along with TCS, Infosys has also been dragging since then. And today, Coforge is the only one amongst the big IT companies now, which is standing tall, which is really differentiated as an AI play, more of an AI jump that Coforge made with the last acquisition. How do you see the IT sector, not from the point of view of the war situation because it's unaffected, but more from the rupee trajectory perspective and the AI thrust and the first results that came out?
So my view has been quite clear on IT. Basically, I always thought that in the short term, I think there is not much to worry, but I think the medium and the long term is what the market is worried about. And that's why we have seen long-term destruction of PEs for this sector, because they are not clear how AI is going to impact them. Everybody is very clear that AI is going to impact them. How much and in what way, I think market is still figuring out. Now, some of these companies are going to pivot, like what we have seen in case of Coforge. Basically, now it is being termed as an AI company. So that is what we have to see, how many of these companies and what way they are able to pivot to the AI. And that is going to determine going ahead which companies make it and which companies maybe, I wouldn't say fall by the wayside because they are too large, but they will suffer.
That's right. The valuation is getting adjusted on the downward side. Nishchal, very quickly, how much cash should one hold as astute investor with long-term approach at this point, and how much should be, really put into work at the current moment, since the volatility period looks like is going to be extended over a longer period of time?
So I'm saying basically a 15 to 20% cash is a good level basically you should be at this moment. And every fall of 500,000 points in Nifty, one should be deploying its cash. So that is important basically, that we shouldn't be waiting saying that the worst is yet to happen. I believe the worst is already past us. The only thing now, the market, every 500,000 point of some announcement or some tweets are going to give you an opportunity, and that's what the investor should actually grab that opportunity.
All right, Nishchal, thank you so much for joining in with your expert take on the markets and investment strategy in a very, very volatile environment. All right, also rupee, remember, is making headlines today because there was a sharp depreciation also on account of, crude prices going up because of the war fears again resurfacing. So let's get chatting with an expert on Forex market, Naveen Mathur, who's the Director of Commodities, Currencies and Gift City IFSC at Anand Rathi Shares and Stock, joins in now. Naveen, always a pleasure to welcome you on NDTV Profit. What do you make of the rupee's movement today?
Good afternoon, and I think the pleasure is mutual. Thank you for having me on this show. Now, whatever has happened over the last, I would say, 3 to 4 days, one, the ceasefire announcement the last week, Wednesday or Tuesday night, and then the talks in Islamabad, the peace talks or the kind of agreement to be arrived between the parties, the US in this case, Israel and Iran. So I think that was positive, which brought rupee the last week to the low, I should say, of around 32.50, 32.60, 92.50, 92.60 levels. The rupee has depreciated because of the continuing trouble in the Middle East. The peace talks have not happened. The ceasefire, although it's continuing, but neither of the countries have accepted to the I would say to an agreement which is win-win for all the three countries, including US, I would say Lebanon, Iran, and Israel. So that's not happened. But the positive thing around this particular conflict is that people have come on the table, the administration from the US, the Iran delegation, which was there in Islamabad. So everybody is now talking about something to happen on the ceasefire and the agreement in the next 15, 20 days. So I think that's a positive stuff. But up till and unless we don't see the Strait of Hormuz, the inflation, the expectations kind of anchored, the things would be pretty much volatile for rupee against the dollar. Having said that, carry on.
Yes. So, Naveen, I wanted to ask you that, the RBI also made a lot of efforts to arrest the fall of rupee because 95 to a dollar was a very worrying level for India as a country. But given this particular situation, it has reversed some of the gains that was made in the last week or so for rupee as well as for the markets, Indian markets. How do you see the rupee movement going forward? Because FII outflows really continue on a rigorous basis given the concerns around crude oil prices.
Yeah, that's a very good question, I would say. Number of fundamental factors which would continue to I would say, define the trajectory for rupee against the dollar. The one would be the dollar index. The dollar index appreciated. It did cross 100 levels in last 1 month. It was back to around 98. Currently, it is 99. So the dollar index would be one thing to watch out for. In spite that the India the macroeconomic seems in a good shape. We are in a good space in terms of our GDP numbers for the last year. Definitely, this particular Middle East crisis would have an impact in Q1 and the Q2 with the lag on the Q2. So I would say the CAD, the current account deficit, the inflationary expectations, the hawkish stance, therefore, by the central banks would be something which would continue to put the rupee not on the appreciative side. The fundamental would definitely help rupee to appreciate as what has happened. And the RBI intervention when the rupee did cross even 95 against the dollar was something to be reckoned with. So I think the RBI intervention, the current account deficit, the dollar index, and the inflationary expectations, and if RBI continues to have a little bit neutral to moderate hawkish stance, we don't see that the rupee should therefore appreciate to a large extent. But I think that the rupee should stabilize at around 92 to 93 against the dollar in due course of time.
All right. So you are penciling in 92, 93 levels of stability for rupee. But Naveen, you also mentioned another important aspect. We look at our own factors impacting rupee, but dollar movement also has a lot to do with that. Do you think that Iran's, toll ask in cryptocurrency is challenging the dollar dominance, you think? How do you see dollar trajectory going forward?
See, it's very, very difficult. If the viewers remember the Euro crisis in 2010, 2009, and 11, after the great financial crisis in 2007-8, I would say the US dollar continues to be the reserve currency, continues to be the currency seen as a safe haven. So whatever we did saw over the last couple of weeks, post this particular Middle East crisis, I would say that the dollar would be critical to a large extent for defining the trajectory of the rupee. In spite, as I said earlier, the Indian fundamentals are pretty strong. Now, the Federal Reserve was looking to prioritize growth against inflation because the inflationary expectations or inflation numbers particularly got anchored in the US at around 2% or so. But then in the last week, the data came in terms of the inflation numbers, and they have gone month on month by around 0.9% and around 1% or so over the last year. So I would say around 3% plus of inflation is something that the Fed would be worried about. We are not on 7-8% post the pandemic, the COVID pandemic, which we saw the pent-up demand coming in. But then at the same time, the Fed would be cautious. And I would say the dovish stance of the Fed, which was, say, 2 or 3 months earlier, now would be changed to an hawkish stance. And if that happens, it is so what is expected today. I would say that the dollar definitely would therefore continue to appreciate, again, a negative for the rupee against the dollar.
Oh, you made a very important point about the central banks. Naveen, a very quick question. How do you see the central banks, and most of the times the central banks across the world have really moved in tandem with each other, whether it's interest rate, trend reversal, or whether it's the other way around. So how do you see the current inflationary pressures because of the rising crude prices, which impact several of our sectors, impacting inflation and our RBI stance in future, because currently they are on wait and watch. But on the other hand, how is the central bank from US Fed going to impact the overall trajectory of central banks across the globe?
So you made a right point. The central banks work in tandem, but at the same time, they also look for the dynamics within the country. So I would say, although the Fed is now hawkish. They want to anchor. They would like to anchor. I won't say that they will. They would like to anchor the inflationary expectations. And as what I read from the sources, it's not to come down. The inflation would continue to take a toll in the US because of the crude and therefore the ancillary costs, which would impact every single person on the main street, their pockets. And that's what is happening. We are just in a month or two, or 1.5 months of the war. And that's what has started pinching in the US. So I would say the road for central banks to become dovish is far-fetched as of now. All the central banks somehow would maintain a kind of neutral to hawkish stance because of the inflation. They don't want the inflation, as they say, the gin out of the bottle. So they don't want the inflation to be, I would say, a troublesome area, in spite that the growth and the economic growth across the world would be impacted by this particular war in the Middle East.
All right. Thank you so much, Naveen Mathur. Always a pleasure chatting with you. And thanks for giving your insights on the rupee movement. So in the range of 90 to 93 in the near term is what is being penciled in. But of course, the volatility really continues as the war situation and the crude prices elevate. All right, moving on then, let's focus on Ather as a stock, Ather Energy. And that particular EV maker is really gaining in trade today. Remember that there is a lot of push towards the electric vehicles, and in the war situation where crude and allied products are of shortage and at higher price, the renewable energy EV battery is the space which is gaining momentum. Delhi is also plugging into an electric future. The capital has unveiled a draft EV policy 2026, laying out a clear roadmap to cut the vehicular pollution and also to accelerate clean mobility adoption. Now, the plan really pushes EVs across all segments, expands charging infrastructure, and also strengthens the ecosystem from batteries to recycling with 100% road tax and registration waivers for the electric vehicles priced up to 30 lakh rupees. Now, fully digital rollout and a strong institutional framework. The message is clear. Delhi wants cleaner air, faster adoption, and an EV shift that really lasts till 2030. And that's one of the reasons why that's also prepping up the electrical vehicle space. All right, can't lose sight of crude movement, which really opened higher at $103 per barrel level, but has now seen a slight bit of softening. Narendra Taneja, who's an energy expert, joins in now. Narendra Taneja, always a pleasure speaking to you. With the turn of the events, which is very, very well expected in war situations, how do you see the crude movement? It did open at elevated levels, has softened a slight bit. Are you penciling in a longer term $100 above kind of levels for crude?
Well, that spike was in response to the, tweet by President Trump, who created a confusion by saying that, we're going to go for a blockade. The question is, A, are they really serious? B, there was a kind of conflicting message in that, because he said those who are paying toll to Iran, they are the ones who are going to be stopped by the American Navy. A, are they really capable of doing that? And B, who is going to set, that kind of mechanism? But of course, when it comes to toll, the demand by Iran is absolutely illegal and is against the international law. And that should not be accepted. The world must reject that, including India. I think it's important, because if you agree to Iran's demand to pay toll one way or another, then it's going to change the economics of all oil importing countries like India, China, Korea, and Japan forever. Because they may start with, $1 per barrel, but who knows, they increase it to 2 or 3 and all that. Moreover, that's against the law. So that must be opposed. If President Trump is basically aiming at that, to stop Iran from imposing any kind of toll or this thing, I think the world must be with him. But that said, at the same time, it's an international channel. and it must remain an international channel with no control by any country whatsoever, because it's a nature-given channel. And if you start doing that, what about the state of Malacca or the state of Singapore is also known. So I think that's the market reacted, but I'm not worried about the prices going at $100 per barrel at this stage. My sense is crude prices are going to be in the region of $80 to $90 on an average. They may touch 100, but they may touch even 75. But if you go for the average, I think it's about 80 to 90. The simple reason for that is that I don't think America is going to restart the war, or Israel might kind of do a few attempts here and there. But I think it's important that America has learned the lesson. Iran also looks at that as an opportunity in order to focus on the future. The negotiations are going to be tough. They may be prolonged. But I think oil markets are concerned. The state of Hormuz traffic will start sooner or later, probably sooner. So I think I'm not too worried about it. $80 to $90 per barrel, because there have been disruption and damage, and that's going to take some time to repair and bring it to the normal condition as used to before the war. That's why I'm saying 80 to 90. $80 to $90 per barrel Brent on an average. As I said, it may touch 100, 105, but then it will drop back. Average $80 to $90.
Average $80 to $90, you're saying, Narendra Taneja, but what will it take? What kind of cues and factors will it take for the oil to subside, crude oil to subside below the $100 level?
Well, you see, first of all, there has been some demand destruction if you look at globally, because some airlines, they have shut their operation, not fully, but they shut certain routes. And some people have also switched to other fuels, other sources of energy, and so on and so forth. There's been a bit of demand destruction. At the same time, there are issues, no doubt about it. But at the same time, I don't really think there's something beyond that markets can't manage or the consumers can't manage. A lot of anxiety. As long as America doesn't go back to the old thing to start attacking Iran again, which is highly unlikely, then I think, markets will begin to fall in place as soon as possible. This is going to take some time for Saudis and Iraqis and Kuwaitis to restart the production, because it takes time, especially when it comes to LNG. LNG can take longer, but I think oil production would probably go back to normal in about 6 to 10 weeks, which means if we really look at the 4 months horizon, things are going to go back to more or less normal as far as oil is concerned. LNG, however, is going to take longer.
All right, Narendra Taneja, thanks so much. Always a pleasure chatting with you. 80 to 90 is the level for crude is what is being penciled in. But of course, it needs some positive momentum for that to really happen. Consistent recovery seen in Nifty 50, but still no let up in sight. So keep an eye out on the market. With that, it's a wrap on Markets at 12. Keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu. Here we come.
कुछ खास होने वाला है।
others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's that today?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand?
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, as always, standing at the NDTV Profit Market Pit with all the action. Sharad, good afternoon. An interesting day of trade, with that gap down open that we saw. We've seen a good amount of recovery that has come in terms of the markets. It seems that the geopolitical issues is something where the markets are now probably trying to discount with the way things and actions are panning out.
Well, that's right. Good afternoon, Hiral. And yes, we had a gap down opening in the markets, but then after that, there has been a minor recovery, but it's still continuing, and all throughout the trading session, we saw that hopefully we end the day in green. That's what everybody is wanting or praying for. Let's look at Nifty Bank, what has happened there. There also the story remains same, but there's a good correction. I'm sorry, a good up move coming in from these levels. So the growth or the gradual movement is definitely happening. But let's look at the triggers for the markets, how things are standing right now. The first one is definitely going to be a very slow recovery is at play for the markets, and there's a technical bounce happening for both Nifty and Nifty Bank, important levels if you are a technical trader. But how much will it sustain? That's something to be looked out for. But remember, in the closing session, we'll have Nifty's weekly expiry as well. Tomorrow is a trading holiday. That's why we'll get into that. But the entire problem remains, Hiral, is the war fatigue which is happening. We have been covering it for the last 5 to 6 weeks, and there's no clarity yet. Broader indices are still better placed. Some value buying is happening in the SMIDs. We saw that in the month of April, the first week of trading, 30 to 50%. A lot of stocks have gone up. India VIX jumps up, and then rupee weakens and yields rise. These are the macro updates which you should be tracking. This is the number on the screen. Power is doing well. Auto and IT are seeing a sell-off right now. But nevertheless, market holiday tomorrow on account of Ambedkar Jayanti, so you might keep your positions light because you never know what's going to happen over the next 36 hours, and because of that there is still confusion and uncertainty in the market. So that's the entire picture, Hiral, to give you. But yes, the war fatigue is here now.
War fatigue is absolutely here, but let's quickly look at what the watch list is indicating right now as we speak in terms of the stocks that we are watching out for. We have fertilizer companies that are in focus, and this is on the back of China banning exports into if you talk about sulfuric acid, that's what is on the cards, and the impact on the war as well. OMCs, the windfall tax hike on fuel exports is something that could be impacting OMCs in trade. You have the city gas distribution companies and Petronet LNG that are in focus on the back of the Hormuz Blockade supply issues. Tata Group companies also buzzing in trade, and this is on the back of the Tata Sons IPO buzz that's happening. You have Shapoorji Pallonji also, who put out a release on Friday indicating that they are absolutely open when it comes to the IPO. Jyoti CNC under pressure, one of the top losers today, and this is on the back of the French arm, which is facing a probe. You have Enviro Infra on the back of an order win, seeing some smart moves along with the Advait Energy. Swiggy, after Zomato, you have the co-founder, which has stepped down here as well. It's going to be interesting to see how the strategy shifts that do happen from here on. Zydus Wellness has been buzzing in trade as well. Strong volumes, and the stock is seeing some smart moves in the last 1 month. NTPC Grain as well, the volumes are pretty strong. Acme Solar, you have HSBC, which has initiated a buy. And your domestic air traffic growth is down 5% on month basis because of all the geopolitical concerns, and that's the reason why you have Indigo, which has been trading under pressure. Steel makers are increasing prices. Gallant Ispat is in focus. NDTV Profit did speak to the management. We'll get you an expert of that conversation in today's session. Coforge also has got all the clearances when it comes to Ancora acquisition, and that stock is in focus. Your EV players are up in trade today, and that's on the back of the Delhi EV policy. Cohance, again, strong volumes picking up on that front. So that's what we're watching out for in today's session. But Sharad, over to you to take the rapid fire with Vishnu Kant in today's session from Master Capital Services.
Thanks a lot, Hiral, for that. Vishnu, it's good afternoon. It's always a pleasure to have you in our show. We'll start our rapid fire segment. The first stock in focus will be the city gas distribution companies. Of course, some volumes movement is happening. Anything over here where the risk reward ratio is looking favorable? IGL, MGL, or even Gujarat Gas, and even Petronet LNG?
Hi Sharad, a very good afternoon. So let's first look at the IGL, which is currently trading with a gain of around 1% almost, and just surpassing the Friday's high. The stock is currently trading well above its 21-day exponential moving average, and it is likely to head towards 173, 175 sort of level. So yes, IGL could be a good pick from this space.
Right, and Vishnu, Tata Group of stocks, anything looking having some value here, at least for a medium-term setup? There is a buzz of the IPO from Tata Sons, but anything which is looking good from the Tata Group?
If you're talking about the Tata Sons IPO, so Tata Chemical is the only company that could be a beneficiary from that. But in this Tata Group space, I would prefer to bet on the Tata Power, which is showing a very good relative strength. And alone in today's session, the stock is up almost 4%, and it is trying to surpass its a crucial horizontal hurdle, which aligns somewhere around 410, 415. So yes, buy the dip approach will be a prudent in the Tata Power. I'm expecting on the higher side the stock could approach towards 440, 450 sort of levels.
Right, Vishnu, and apart from that, Advait Energy and even Environ Engineers, these two stocks are in focus because of the order wins. Anything looking good on these cash counters?
Well, so looking at Enviro, although the stock is consolidating with a narrow range of 15 rupees or 10 rupees, but yes, the way prices are behaving above the 21-day exponential moving average, it is giving a sense that the stock is accumulating. The big buyers are accumulating the stock at a current level. So yes, one can go long in the counter with a potential upsides towards 110, 115 on the lower side. The stop loss should be maintained below 98.
Right, and your views on Zydus Wellness and even NTPC Green Energy, both of them are in the green, good volume pickup.
Well, so in today's trading session, we have seen a very huge, volume and huge gain in the Zydus Wellness. The stock is up around 10% in around today's trading session. Although in pharma space, the stock is looking quite good, and I'm expecting this gain is likely to remain intact. But one thing we have to keep in mind is that the stock has given an extraordinary move in today's trading session. Although on card, the stock is likely to extend this rally towards 650, 690. But 650, 690. But simultaneously, we cannot rule out the possibilities of some corrective fall. So in a staggered way, we can go long in Zydus Wellness.
Right. Apart from this, Ola Electric and Cohance Life Science, there have been a good medium-term setup coming in, at least for Ola Electric. We have seen that up move coming in. Is there any heat left in this rally, or is it good time to book profits in Ola Electric?
So, I would prefer to avoid Ola Electric because their stock is still trading at 100-day exponential moving average. But on the same side, Cohance has given a very good opportunity to accumulate the counter. But on a Friday we have seen a huge gain in the counter that has been around 20%. So keeping that gain in the mind, I believe there could be some corrective fall. But yes, texture has been turned bullish in the Cohance Life Science, and this could be a very good step to go long in Cohance Life Science for a potential upside towards 430, 440.
Right. Thanks a lot, Vishnu, for this rapid fire segment. But moving on, we spoke with the management of Gallant Ispat today, and the company shared about its growth outlook and the hike in prices of some key products as well. Listen into what the management had to say.
Currently, in the FY26, we have operated at an overall capacity utilization of 86%. And while we are adding 0.25 million, which would be commissioned in H2, sometime in the beginning of H2. So we can expect 50% of the 25% capacity that is being added kicking in H2. So yeah, we are expecting a volume growth of 10 to 15% in FY27 and the entire 25% in the next FY.
Interesting. Bullish commentary coming in from the management. But Vishnu, your views for Gallant Ispat, the stock has already run up. It's what we have seen in the charts. Is there any other risk-reward ratio left?
Yeah, true, Sharad. The stock has given a very good breakout from the falling, batch pattern. That's a bullish pattern, in fact. And apart from that, the stock is also trading off the cluster of all key moving averages. So I believe on the higher side, the stock is all set to extend this gain towards 720, 730. While on the lower side, if prices comes close to 640, 630, one can go long in the counter, maintain the stop loss below 590.
Okay, so that's with regards to Gallant Ispat. But moving on, let's quickly look at what's actually trending on Google in trade today, because Ola was one of the counters we were watching out for in terms of Friday's session. Today, let's see if that hits the list yet again. There you go. It's still there today as well. You have Adani Power, ICICI Bank and Eicher Motors. Very quickly, Vishnu, any quick view when it comes to names like, say, Adani Power, ICICI Bank and Eicher Motors, because ICICI will be reporting numbers the coming weekend. So the entire banking pack will be in focus as well.
Well, so first let's talk about the Adani Power, and the stock is doing very good, and currently it is trading around 182. I'm expecting the gain should remain intact on the higher side. 195 is immediate resistance where stock can approach, while on the lower side I believe 170 will be immediate support, so one can go long in Adani Power. Well, so second stock is the ICICI Bank, I think you asked, right? And looking at this, private lender, the stock has a room to approach towards 1350, 1360, which is the vicinity of 200 exponential moving average. So I'm expecting some little, gain in this counter. So one can go long with, keeping that view in the mind and that target in the mind. While on the lower side, the stop loss should be maintained below 1310. And third stock is, I think, Eicher Motor, right?
No, we just wanted your views with regards to ICICI Bank and Adani Power. But thank you so much, Vishnu, for joining in. Always a pleasure to speak to you as well. So that's with regards to where the rapid fire goes, as well as the stocks which have been trending on Google. But Sharad, over to you.
Thanks a lot for that, Hiral. And the important developments have been coming in the oil and gas segment today. Export duties, something announcement is coming in the oil sector. But to give in more details, we're joined in by Somit. Somit, what's the important news and the impact?
Well, the important news is that government has increased the export tax on fuels that get exported. Like for diesel, the tax has been increased to $95 per barrel as against $37 per barrel. And for ATF, it has been increased to $72 per barrel from $50 per barrel. For petrol, it continues to remain nil. Now, what will be the impact on this? For standalone refiners and private refiners, the impact is negative given the fact that the margins are getting capped. Despite higher GRMs, they won't be able to earn the higher gross refining margin because they'll have to pay more tax on it and the margins will be capped. But for Reliance Industries, the impact is expected to be on the lower side given the fact that 50% of their capacity sits in the SEZ, that is a special economic zone, and export tax won't be applicable on the unit which is sitting in the SEZ. So the impact on Reliance Industries is expected to be lower compared to what the street has been fearing. Now for the oil marketing companies, there won't be any impact on this given the fact that whatever products they're making at this moment, they're not exporting, they're using it for the domestic purpose. But on the other side, because of this tax, there's also news of OMCs asking for lower refinery transfer pricing. Now, because of lower refinery transfer pricing, what happens is that companies with excess refining capacity sell the final product or final petroleum product to domestic refiners at a lower price. Now, this also impacts Reliance Industries in this case. But again, this is positive for the oil marketing companies like IOCL, BPCL and HPCL, given the fact that for them, the sourcing cost of finalized petroleum products comes down, and that will aid their margins going forward. So that is positive for the oil marketing companies. For Reliance Industries, largely neutral to negative, but for standalone refiners like MRPL, Chennai Petro and private refiners, it is largely negative.
Thanks a lot for that, Somit, and he's explained us from the technical perspective to a very simplified perspective. But Mahesh, I just wanted to get you on this as well. Good afternoon. Always a pleasure to have you. Initial views coming in for the OMCs and even Reliance as a whole. Fundamentally, where are these companies placed?
Good afternoon. So I think this implication is totally negative for Reliance as well as MRPL, Chennai Petroleum. In this circumstance, already I think we have expected these type of any event in the petroleum company. So this is the negative, but yes, from oil marketing company prospect is slightly positive. So hope some in near term we can see some consolidation in the same. But if you are looking from a fundamentally perspective, Reliance has a ability to touch at least 1,700 plus level in 1 year horizon. So for near term, it's a negative, but in a longer term, if you're looking from a Reliance perspective, that is the many positive trigger in Reliance.
That's to where OMCs go. But moving on, Puravankara is in focus. Let's pull up that counter on the screens. The company has just reported their business update, on the back of which you've seen a strong spike that has come in on this one, a 9% up move. Their sales value has seen an uptick of almost 190%. Collections have seen a growth of 36%. Sales area around a growth of around 112%. And realizations have come in at 11,787 rupees year on year, which is a growth of 37%. This is the highest ever quarterly sales value that Puravankara has achieved, and that actually is reflecting in the stock price as well. The highest ever annual sales value is also what they've said, and higher ever annual customer collections from the real estate business, because their FY26 collections have seen a growth of around 15%, and the realizations, if you have to compare FY26 to 25, they have seen a growth of nearly 21%. What they've indicated is that they're continuing to see strength when it comes to their growth pipeline, and they've added nearly 15,200 crores in terms of estimated GDV during the financial year. They're looking at Bangalore, Bombay, Pune and Kochi when it comes to new projects. So Puravankara has one. Mahesh, your quick view when it comes to Puravankara, that stock at the day's highest levels.
See, the numbers are very good. I think stock has a potential up to 300 level, but in near term we can see 250, 260 levels. Numbers which is given by company is very interesting. I think Puravankara is doing very good in Mumbai also. So I hope in near term we can get 250, 260 level, and in the longer term 300 plus level can be achievable.
In for Puravankara, but there's an interesting chemical element. It's H2SO4. And if you are in your childhood, you must have heard about this chemical gas smelling of rotten eggs. But what's the impact analysis here? Is there some news on that? Anything there on the sulfuric acid and what's happening there?
Yes, absolutely, Sharath. So China is supposed to halt sulfuric acid starting May, and this move will impact your fertilizers, your metals and defense sector. Even semiconductor will be impacted. Now, now if you see, the sulfuric acid prices have risen since the Iran conflict began, and the Strait of Hormuz have been disrupted. Sulfur shipments from Middle East. Now, what is the importance of sulfur supply? If you see, Middle East produces around 1/3 of total sulfuric acid, and which is a key raw material for use in your copper extraction and various other segments. Now, China is conserving sulfuric acid for ahead of peak cropping season, and hence they have halted the export. Now, how this is going to impact fertilizer companies, if I wanted to ask? So basically, if you see, the high sulfuric acid will raise the raw material prices and will impact the margins for these fertilizers companies. All your fertilizers companies will be impacted, starting from Coromandel International. You have Paradip Phosphate, Tumble fertilizers. Now, talking about the other segments which will be at risk, you have copper production will be at risk, as sulfuric acid is a vital product for copper extraction process. Hence, Hindustan Copper, Vedanta and Hindalco Industries will be impacted. Talking about the defense equipment, if you see, large amount of copper are needed to replace damaged radars and systems, and hence your Bharat Electronics, Bharat Dynamics are some of the key defense names which will be impacted. And lastly, on the semiconductor vulnerability, ultra pure sulfuric acid is required to make advanced chips. So your Dixon, Keynes and all these companies will be impacted. So all in all, because of the halt by China will raise the sulfuric prices and will impact most of the sectors as far as India is concerned.
Thanks a lot for that. We had a revision of our chemical class as well. Thanks a lot for that, Varsha. But Mahesh, just want to get your views on this. Fertilizer space was the darling last week when we started talking about the budget or the fertilizer subsidies increasing. And now we're seeing another adverse news coming in and literally negating the stock prices. Any value are you finding in fertilizer, or would you like to stay away from it?
So, Sharad, I have already told you last week that we can play, momentum play can be done here. We are not doing a longer term or picking fertilizer space this year, because we are expecting some move from China onwards, because in political view, if you are looking from India and China perspective, there is some news coming from last week. So I think for time being, we are sideways from these type of fertilizer and these type of stock where China can impact something. So we are sideways for time being.
Okay, so that's with regards to where fertilizer companies go, negative impact that could be coming in as well. But Jyoti CNC, that's another one that you should be watching out for. Stock is one of the top losers because one of their French subsidiaries is under investigation. My colleague Parth Goel is standing with us to tell us more. Parth, what have you picked up and what's the kind of impact that one should be watching out for?
Thanks a lot, Hiril. So French authorities have actually initiated an investigation against the French arm of Jyoti CNC. The allegations are that they have violated the European Union laws by exporting some dual-use machinery. However, Jyoti CNC has denied all the allegations and have said that they will contest these allegations and fight them until they are proven innocent. Authorities have seized the French arm's bank accounts, which total to around 4 million euros, and two residential properties that are owned by Jyoti SAS are also seized by the authorities. So these frozen funds and liquidity strains will pass some near-term execution risk for the company, and currently the French operations account for less than 15% of Jyoti CNC's revenues, but all of this is still in the early stages, so let's see how the ultimate financial impact pans out for the company. But you rightly mentioned the stock has taken some pressure and is down almost 15% today. In fact, in the morning it was almost about to hit a new 52-week low as well.
For that, a quick view, Mahesh, in terms of Jyoti CNC, 14.5% downtick.
15% of revenue, but from apart from revenue, that's a more on educational strategy. So I think it's a negative for Jyoti CNC. We can see some more consolidation in stocks towards 600, 640 level at least. So for time being, we are negative on Jyoti CNC because it's not a normal case. It's looking something is serious in it.
Right, that's the view coming in. But adverse impact or adverse news flow is developing in Swiggy regarding the co-founders' exit, and we will be starting a new venture. Seems like larger players, there is a trend of co-founders starting their own ventures. But to put that in perspective and what's actually going to impact the stock or not, we're joined in by Mahima. Mahima, how much stress is there for Swiggy because of this news?
Yes, so I think there is stress coming in for the counter, and we've seen this in a lot of new age tech platforms, right, where we're seeing co-founders and CEOs quitting. Nandan Reddy has done the same. He was the head of innovation. He's vacated his position as the head of innovation and the co-founder, and has also vacated his board seat. Now he says that he wants to explore new passionate independent projects. Basically, the entire idea of Swiggy has been built by him as a co-founder. It's been 12 years since he was building this, and he was the backbone when it came to the tech solutions for the company. Some other management changes also were there. Roger Clark was replaced by Alvis Pinto as the board member. This is from the process team. Plus Funny Kishan and CFO Rahul both are elevated both to executive directors. Just to give viewers a brief about the companies that he's already invested in. Nandan Reddy himself, he holds an investment in unicorn that is Race. EV-backed startup called Vidyut Tech is also something that he's invested in, and Pesto Tech is also something that he's invested in. He's seed-funded consumer startups like Chai Basket, Stance, as well as Mav Health, and he's invested in diverse platforms like Felsti Games, Supernova, as well as Neen. So these could be some of the possible businesses that he could probably expand or explore into after this.
Right, investments and family offices, that's the way to go. Thank you very much, Mahima, for that. Mahesh, I just want to get your view on that. Does it change the fundamental perspective for Swiggy on these announcements, or now these large companies, they can be on their auto mode?
Good approach. I think stock is already corrected large from 1 year, 2 year horizon. So stock is already priced in many things. But yes, the challenges are there. Exit from ready. It's a sentimental negative for stocks. But if you're looking from a peer comparison, stock is largely corrected lot from higher levels. So these levels are not much more downside we are looking. But we are looking on a numbers. We are expecting that Swiggy can post something good number in this counter or a next counter. So I think we have to wait and watch further for a number specific. If number are coming good, then stock can be re-rated further. From current level, we are neutral on the Swiggy, but yes, we are watching carefully on this app.
That's with regards to Swiggy goes after Zomato. We've seen a change of leadership happening there. A quick view coming in terms of the Bosch conference call, and this is on the back of the consolidation that has happened. My colleague Puneet is standing by to tell us more in terms of what did the MD actually say at the conference call, which would actually matter. Puneet, over to you.
Well, just 3 to 4 key points because this acquisition, a big one, 9,000 crore that Bosch India is investing in acquiring RBIC or Bosch Chassis Limited. And a lot was made of what could be the potential opportunity. One of them is the two-wheeler ABS mandate. Now, with this acquisition, Bosch India gets the technology for the ABS products in India. And along with that, the braking system, which is, of course, anti-lock braking system. So that mandate was expected from 1st of January of 2026 for all two-wheelers above up till 125cc. So that has been deferred. But once that comes in, whenever that is, it will be a big opportunity that they highlighted. The acquired entity had roughly 3,500 crores of revenue in the 9 months of FY26. Last year, it was 3,900 crores. It has higher margins and higher EPS growth also. So this acquisition will be accretive from day one. Very important, one key highlight mentioned was that why was this entity chosen to be acquired by Bosch India, which is for Bosch Chassis, and not the auto component one. And for them, they highlighted a very important point that is the low margin business. Growth is strong, but that is one of the key differentiation with this business that they get in terms of growth as well as margin growth.
Okay. So interesting comments coming in from the Bosch conference call. The stock down 1.5%. But completely out of time. With that, it's a wrap on this edition of Trending Stocks with Sharad, the team that put the show together, and myself. And a thank you to Manish Oja as well for joining in. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ खास होने वाला है।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Nifty and Sensex retreat from their day's low but remain under pressure as geopolitical tensions heightened in the Middle East. Broader markets mirror benchmarks as most sectors trade under pressure. Middle East slips back into danger mode. US military threatens to block maritime traffic in and out of Iranian ports while Iran warns of dire consequences. Supply jitters send oil soaring above $102 a barrel. And it's an NDTV Profit exclusive. India Inc. flags a fundraising roadblock. Companies are asking SEBI to revisit QIP pricing rules, arguing that floor prices based on historical averages are misaligned with current market levels. Sources say that the government has rolled out draft CAFE 2027 norms, offering a softer phased glide path for fuel efficiency. The proposal gives automakers breathing space while keeping a strong policy push for EVs and hybrids intact. Good afternoon. You're watching Lunchtime Trades with me, Shreyanti Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at the markets right now, and it's not looking like a great picture right now, whether you talk about Nifty or Sensex. So that's the kind of setup that you're looking at broadly. So you're looking at just about a 240-point downtick coming in for the Nifty. When you talk about Sensex as well, that cut does get much deeper. So about 850 points, in fact, is what you're looking at in terms of that. Now, when you talk about the sectoral picture as well, that is also very sharply tilted in the favor of losses as well. And you do have PSU banks that are declining, leading some of those losses as well. Other than that, something like auto, oil and gas, IT, FMCG, PSU banks, like I mentioned, some of those sectors are actually on the back foot. What's doing quite well right now is something like energy or even defense, just holding up with that little bit of green also coming in terms of a sectoral picture. When you talk about Nifty 50 in terms of the top losers, something like an Eicher Motors, Maruti Suzuki makes it to that list from the auto pack as well. Here as well, leading losses, and you do have heavyweight Reliance that's also on the back foot and quite much, because 2.8% downtick coming in for a heavyweight like that. Into Globe Aviations as well, about 2.5% odd cut coming in there as well. And even HDFC Bank is down about 2.5%. In terms of top gainers from within the Nifty 50 pack, something like NTPC, Adani Enterprises, HDFC Life, ICICI Bank, or Bharti Airtel for that matter, just holding up quite resilient right now in a market like this. But let's also talk about what else is happening in terms of the markets right now. Of course, there's oil prices that are definitely top of the mind right now, and that's also something that we'll be talking about in just a short while from now as well. When you talk about crude, of course, you do have WTI that has surged past that $104 an ounce level, holding up close to that as well. But Brent also about $101, close to $102 a barrel. That's the kind of picture that you're looking at, and we'll get you some more insights shortly. But before we do that, widespread unrest broke out in Noida and Greater Noida in Uttar Pradesh as workers from multiple companies, in fact, staged protests demanding salary hikes, with incidents of vandalism, stone pelting, and even arson reported across key industrial areas. NDTV's Anushka Garg reports from the location.
We are in Noida Phase 2 near Hosiery Complex, where several of the workers had staged a protest, after which it got violent and they burned 4 police vehicles that we are showing you from the spot. The aftermath of the protest that in fact took place today, after workers who were furious and were saying that they were deceived by the company. They have in fact also said that they were protesting and it caused a stir, demanding higher minimum wages and better compensations. The workers were demanding pay parity with Haryana, citing higher inflation and living cost. The protest got violent, which resulted in this kind of visuals that can be seen here in Noida Phase 2 near Hosiery Complex. We can still see the Noida police who are here at the spot taking cognizance of the incident that took place, where 4 police vehicles were burnt by the workers who were protesting here. Employees were from several companies in Noida. Uttar Pradesh have also in fact taken to street to protest. The workers alleged that they were deceived by companies in the name of salary increase increments. Meanwhile, on Saturday, a clash broke out between workers and police personnel in the Ecotech police station area of Greater Noida. The workers were attempting to block the road, but the police stopped them, leading to tensions and escalation. Videos of the incident went viral on social media as well. Following this, a meeting was also held on Sunday at the Noida Authority Auditorium involving police, government and district level officials. In the meeting chaired by District Magistrate Megha Rupam, several decisions were taken in the interest of workers. Now, these includes double overtime pay, timely payment of salaries and assurance of safety. But now we are seeing that Monday morning, employees once again staged protest on the streets in Noida, leading to traffic congestion across the country, and 4 police vehicles that were burnt. We are showing you another charred remains of the vehicle that can be seen here in the middle of the road, with Noida police and paramilitary forces manning this whole street so that other protests could not in fact brew here. That is why we are showing you the visuals that in fact can be seen here in Noida phase 2, where workers who were furious because of the demands that they were in fact putting in place and demanding a higher pay because of inflation was not met. They took to the streets, and violent protests took place in Noida sector phase 2 and also in Noida sector 62, where several workers took to the streets and started protesting here, after which the protest took a violent turn, which resulted in 4 police vehicles being burnt by the angry protesters.
No, absolutely. And thank you so much, Anushka, for getting us all of those latest details. Quite unfortunate the way that the situation is unfolding, and also the way that the traffic snarls are being caused right now when it comes to the entire Noida and Greater Noida region as well. But let's also move on. Sources, in fact, tell NDTV Profit that companies, in fact, have asked SEBI to change QIP pricing methodology as formula flows outpace market prices. In fact, Nimit Dixit is joining in with some more details when it comes to this one. Quite the update that you're looking at right now.
Yes, Shayansi. So what's happening is QIPs right now, which were one of India's premier fundraising tools in the public markets for the last 2 years, have sort of gone dead this year. Prime database tells us there's only 4 that have happened so far this year, although a few more in the pipeline. Now, industry sources tell us that they've been reaching out to SEBI with demands to change the pricing methodology. Why this is because the current pricing methodology anchors on a very long-term historical average of 26 weeks or 2 weeks, whichever is higher. And in the current correction market that we're in, the 26-week average gives a much higher price than current market price, and investors are not willing to put in that money. So the big concern is how SEBI will look at this now. There's been no formal consultation yet, but where companies are more and more coming out, they're delaying their QIPs for this reason, because they want a price that is closer to the current market value that they're seeing, that is more palatable to investors, Shreyansi.
No, absolutely, and that's quite the update that you're looking at right now. So the way that I look at it, a key friction point in capital raising is what is coming into focus right now. Companies and bankers are flagging that SEBI's QIP and preferential pricing rules, arguing that those floor prices tied basically to the historical averages are out of sync with current market levels. So in a corrected market, this is one mismatch that is delaying deals, deterring investors as well from paying premiums, and also slowing fundraising momentum. So a lot that you're looking at right now. The question now is that are investor protection norms colliding with market reality right now? Is it time to tweak the formula? Let's also get you some more insights right now. Prashant Gupta, National Practice Head Capital Markets, Shardul Amarchand Mangaldas joins us right now, as well as Manan Lahote, Partner Head Capital Markets, Cyril Amarchand Mangalas as well. Thank you so much for joining us, both of you gentlemen. First things first, Prashant, I'll come to you when it comes to the current QIP pricing formula that you're looking at. That is under SEBI effectively, pricing deals out of the market in a correction phase. How are you looking at the latest developments right now, and what is the way forward that you see from here?
Yeah, no, it's an interesting question. Actually, we've been, over the last 15 years, those pricing norms have been revised 3 or 4 times by SEBI. I think what has happened is that the impact of social media, tweets by world leaders, whether it's tariffs or conflicts, etc., has made markets way more volatile than they were, even 5 or 6 years ago. I think 15 years ago we had a 26-week formula for QIPs. Now we actually have a discount-based formula to the 2-week high and low, which was actually introduced a few years ago based on market feedback. I think what's happened is that with the volatility we see in the market, in the first quarter of this year itself, we've seen probably 10 days where the market has been up or down 2%. So I think it becomes difficult to do QIPs in that market. And I think that's where the need to sort of relook at those pricing norms comes from. So I think, if you look at sort of other jurisdictions like the US, which is more free market in some ways from a pricing perspective, there the board has the discretion to price the deal. And obviously the board has to act in, it's in best interest of the company. So I think they leave it to the board. I think India has always been more regulated in that way. But I think at some point, we'll have to relook at the norms again.
Thanks, Prashant. Manan, I'll jump to you here quickly. So what is it that companies really want now in this environment? Would they be happy with sort of a relaxation on the look-back period that is there from 26 years to reflect more currently what is the maybe an 8 to 10 week average, something closer, or is it a larger flexibility that they're looking for going forward? Also, I wanted to ask you, is this a temporary measure for the market situation now, or are we looking at a more permanent solution?
Right. Thank you so much. Quite a few thoughts on that one. First up, QIPs have a look back period of just about 2 weeks, like Prashant said. So the problem is more acute if you want to do a preferential allotment, for which the look back period used to be 26 weeks, but is now down to 90 trading days, which is about 4 months. But it is also higher of either 90 days or the last 10 trading days. So it's a higher of these two sort of levels. The flexibility, that issuers or companies are looking for is more for preferential allotment, because the trailing period is obviously much longer. And this is a problem not only now, this is a problem which happens in almost any down market or corrective phase. In fact, it became sort of quite an acute problem when around the COVID time in 2020, and SEBI that time, in a measure to provide relief to all these issuers, came out with a temporary measure. It was temporary in that case, and it doesn't need to be temporary now. And I will speak about what needs to be done now. But what was done that time was, for a period of 6 months, they gave a pricing formula which was linked to a shorter look-back period. I mean, there were some of the guardrails. For example, the lockup on those shares was a little longer, not 1 year, but 3 years. Coming back to where we are today, I think we should think of liberalization in a much grander way. Both QIPs and most of the preferential allotments, and I'll speak about preferential allotment in a second, but definitely on QIPs, there is no possibility of enrichment of the controlling shareholders. So we should think about, do we really need any pricing floor? You anyway have guardrails. For example, these allotments require you to take special approval of the shareholders. There are guardrails around what you can do with the money. And of course, market forces by themselves act as a very important guardrail. So we should think of moving away from the period or the percentage of discount and look at the larger sort of, way that when Prashant mentioned in the US, capital is raised, we should bring that framework into India as well.
Very interesting. Prashant, to you, of course, similar thoughts. Do you also have any thoughts, firstly, on how we should do this moving forward? And a part of which Manan already answered, I wanted to understand why SEBI has this law in place. If you could explain to our viewers from an investor protection standpoint, why this law is in place, what is that rationale that needs to sort of move, that Manan has sort of answered, but I'd like you to elaborate on it also.
Yeah, I mean, I think Manan sort of touched upon it. I think historically there was sort of distrust in the fact that proceeds that were being raised not from existing shareholders was not benefiting, for instance, retail shareholders who can't participate in a pref allotment or a QIP. And I think the regulator was basically trying to protect that section of the investing community to make sure that the price at which the shares were being issued were, properly priced. I think the point is that, we're no longer, we're a fairly deep capital market. In the last 5 years, there's obviously been huge change in, the amount of domestic capital, et cetera, in institutions, et cetera. So I think, as Manan is saying, I think we need to sort of, if you want to change something, we have to kind of look forward to where we want to be in 5-7 years in terms of the amount of capital companies should be able to raise. Because in the volatile environment, and, honestly, if you ask Manan and me, I think constantly live in that phase now. I think the last 2 years have, there's 2 good months, then there's, some other sort of geopolitical issue that comes up. So I think we have to be able to encourage companies to raise that. We have to trust boards I think SEBI already has norms on, the number of independent directors you need on a board, etc. So, I mean, if we're not going to go for all the companies, I think a good start would be, for instance, maybe the top 250 or top 500 companies by market cap, which should be allowed to sort of have a freer market pricing, which is just, the board should be allowed to determine it. Maybe smaller cap companies or where there's less free float, I think those companies, perhaps the regulator can still step in, but I think we just have to kind of be more liberal on allowing companies to raise capital.
Absolutely. Point taken there. Manan, I also wanted to try and understand what you think about the companies already exploring alternatives like private deals or structured transactions for that matter, because QIPs are becoming harder to execute. Is that also the way that you're looking at things right now?
Any transaction where you will eventually get equity shares, the pricing floor will apply. The preferential allotment regulations in India are wide enough to cover any security which will convert into or be exchanged into equity shares. So the pricing would still apply if it has to have any element of an equity share eventually.
Perfect. Just before we close, I'd like to understand, there is a pipeline, right? You agree that there is a pipeline for QIPs and pref issues as well. And it is this market correction right now that's stopping it. So do you see if either the market changes or if SEBI sort of like they did last week, presses pause or gives some temporary relaxations, do you see a pipeline coming through in the future? To both of you, Prashant, you first.
I think the pipeline exists, and I think Manan would answer the same thing. I think companies are still looking at raising money. I think the time for quick fixes or sort of short-term fixes, we kind of need to move beyond that, because by the time we do the quick fix, there's some other issue comes across. Right? I mean, for me, the more liberal we are, at least encouraging the larger companies, and the top 250 companies or 500 companies are actually fairly, well governed now. So I think we just need to trust our boards and our companies to do the right thing.
No, absolutely, and thank you so much for taking time out, gentlemen, and joining us this afternoon. So there you go. Those are some insights also coming in when it comes to the entire story that we talked to you about. And that's Prashant Gupta and Manan Dhorte joining us with all of those insights. But like I said, it's very important to take a look at crude prices right now, the way that things have been unfolding, the kind of headlines that you have coming in when it comes to crude prices. With that in mind, let's quickly take a look at crude prices and get you some more insights as well. So you do have WTI that in fact surged past 104. Currently it's pulled back just a tad bit, but still elevated and very close to those $104 a barrel levels. When you talk about Brent as well, you're looking at somewhere close to $102 a barrel, and that's been the situation for much of this afternoon. Let's also get you some insights from Vandana Bharti, Head of Commodity Research at SMC Group, who's joining us right now. Vandana, thank you so much for taking time out and joining us this afternoon. First things first, I wanted to try and understand the way that you're looking at oil prices right now going forward. What is the trajectory exactly that you're penciling in given all of this uncertainty?
Yeah, hi Shansi. Good afternoon, and thanks for having me in this show. Definitely, crude oil is going to stay higher for longer this time because their disruptions will be there for longer. So this time their trajectory will be to the higher side. Now we are not expecting any kind of level of $60 to $65 very soon. So from $60 to $65, it has moved up towards the level of $80 to $85. So the base case is $80 to $85. The bull case is here $110 to $115 because the tension is rising, and another straight is the supply side is on a stake. So 25% crude supply is on a stake. So yes, we are expecting a higher trajectory for crude oil prices, and some bans from many countries in case of other commodities like sulfuric acid, which you were talking about. So many restrictions on exports, it is coming soon.
No, absolutely. Many restrictions definitely coming soon. But in terms of price levels, specifically talking about Brent and WTI, you've seen some of those elevated levels come back into the picture right now. Some of the supply disruptions that you have right now, it's also very clear that it might take months to years to fix some of those disruptions. Do you see what kind of levels are you then penciling in given such a setup right now?
in those scenario, like currently, we shouldn't prefer the futures prices, because ultimately it is the spot prices which is going to give impact on the economic activities, inflation data, GDP data, every numbers. So when we talk about the price of what price we are importing from other nations, it is somewhere near $145 to $150. When we talk about the WTI and Brent crude, it is somewhere near $110 to $115 to $104. So the derivative prices is not currently truly reflecting the picture of the spot prices, and its spot prices is really very is having really a very big concern this time, considering the spot prices and expecting that the prices should be on the higher side, $120 to $125, because sooner or later futures prices will reflect the prices of spot prices, and it happened in case of silver. It should happen in case of crude oil as well.
No, absolutely. It makes a lot of sense in terms of some of those elevated levels also coming back into the picture. Of course, 120 to 125 is not a stone's throw away. It's quite some, some barrels, some dollars per barrel to go for that particular price level. Let's see whether or not the situation really boils up to that point. But when you talk about gold as well, you're seeing quite the interesting picture also play out. On one side, you do have inflation fears. The other side, you do have the rate cut uncertainty right now that's both helping but also denting appeal when it comes to gold prices. How are you looking at the next, this particular week going forward? What are you then penciling in by the way of price levels?
Very strange movement we have seen in gold prices, and now it is completely decoupling from the safe haven buying. But last week move, it has indicated that the safe haven platform is already there in gold prices, and we have seen a massive outflow in ETF, no doubt. But yes, physical buying, it is already there in the market. Even central banks to retailers, they are buying on every correction in gold prices, and gradually it is regaining the status of safe haven buying. And April onwards, we are going to get a negative data on many economy fronts, and gold is going to digest all. So this time we can see a recovery in the prices of crude oil, and it has a base near $4,600 in international market. We talk about domestic market, the base should be of near 1,47,000 to 1,45,000. And this week we are expecting an upside in the gold prices, and it is maintaining the level of 50 days EMA right now, and it should stay above the level of 50 days EMA until the time it is trading above that. We are expecting a higher side in this week. And if we talk about the counterpart of part of gold, that is which is dollar index and treasury, they are moving with a very slow momentum. So this
absolutely.
time, gold is going to take a second.
Right, absolutely. And we've seen that really interesting tick really when it comes to dollar as well. But very quickly before we let you go, just wanted to get a word in as far as copper is concerned. It's under pressure right now. Do you see that sustaining as well?
Copper, nickel prices, all base metals, they are going to sustain this time, because sulfuric acid export ban, it is going to give impact on the physical availability of these metals. So whatever metals they are there, every big countries, they are making a strategic reserve. Now China is importing more and more iron ore and steel, and because of that, the strategic reserve creation, it is going to give positive impact on the prices of copper as well. So it is not an actual need at present, but sensing the nervousness in the market, every country, it is going to create a strategic reserve for every critical minerals to every critical base metal. So copper, it is going to see a good upside in this way, and we're expecting 1250, 1260 kind of level in copper.
No, absolutely. And thank you so much, Vandana, for taking time out and joining us this afternoon. So there you go. Don't be surprised if you see copper prices claw back up after that little bit of loss that they've had just today. But let's also get you some more news and updates. FII filed against 5 Anand Rathi wealth officials after employee alleges sexual harassment and threats. Ridhima Bhatnagar is standing by with some more details when it comes to this one.
So, a woman employee has accused 5 officials of Anand Rathi Wealth of sexual harassment and intimidation. So, the complaint has been filed in Shivaji Nagar police station at Pune, and the 5 officials are Feroz Aziz, the named ones, Rakesh and Sonali Rawal and Swapna Chakrabarti and Tejal Shah. So the woman alleges that one of the executive directors, namely Swapna Chakrabarti, had harassed her and followed her while the others ignored her complaint. She accuses that her complaint was repeatedly ignored, and she was also threatened that her job will be lost post that. Now the FIR has been registered and the investigation is underway. Now the company, on the other hand, has said that they were aware of the employee's complaint, and they had advised her that she reaches out to the internal POSH team, but she chose to go ahead to the police directly. And the company also says that the Mumbai police on 24th March 2026 had closed this particular case, and now the case is sub judice in the industrial court. And the company has said that it will comply with all the necessary steps taken for the investigation so that a smooth outcome comes out, and it's ensured that women are safe in the workplace.
Absolutely, and it's very important to see how that really plays out for the company as well. Thank you so much, Riddhima, for joining us with all of those details. That's all the time that we have on the show, though. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
कुछ बड़ा होने वाला है।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
fields and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. So what's on the show today? Firstly, we'll be speaking with the management of NPST. Now the stock is up nearly 37% in the last 1 month, and this is despite the market weakness that we are seeing. So what's the FY27 outlook is something that will question the management on the show today. So stay tuned in and listen to that. Apart from that, we'll be also discussing stocks like DMCC Specialty. Now that stock is up 20%, has hit an upper circuit. It's its biggest intraday jump that we are seeing since April 2022. Strong volumes. The company is a producer of sulfuric acid. So the recent ban by China, how does that help the company, is something that you will get to know on the show today. Apart from that, it's Atul Auto that is also in focus. The stock is up nearly 18%, its biggest intraday jump since September 2025. And will the Delhi EV policy actually benefit the company? We'll get to know on the show. Apart from that, there is Sejal Glass. Now, we spoke to the management of Sejal Glass on April 2nd, and since then, the stock has been zooming up in trade. It's up nearly 56%, has been gaining for the last 7 consecutive sessions. What did the management say and what's the way forward is something that you will get to know today on the Small Cap Buzzers. And lastly, we'll be also speaking about Enviro Infra. That stock has hit a 2-month high. It has been gaining in trade. Multiple order wins is what the company has announced in the last few days. Now, if you look at the market, the Nifty, yes, we are down by around 223 points in trade, but from the day's lowest point, we have seen a stellar recovery from 23,550. We are now trading around 23,800, a sharp 250 points odd recovery that we have seen in the market. If you look at the sectoral indices, on the top, a gainer side, it's the Nifty PSU index and the Nifty Defense index that has been gaining in trade. But on the loser side, we have Nifty Auto, Nifty Oil and Gas, and Nifty FMCG, which are down anywhere between 1.3 to 2% in trade. But when it comes to the small cap space, Mahima, what's been buzzing there?
So, Soumit, overall in the broader spectrum also we've seen recovery coming in, but not as sharp as what we've seen in the benchmarks. But still, both the small cap 250 and the mid cap 250 trading at its day's high point. But with regards to some specific names, 2 names that Soumit mentioned, DMCC Specchem as well as Atul Auto, both locked in upper circuit right now. Apart from that, you have Jinkushar Industries, which is seeing an uptick of around 13.8 odd %. Birla Cable, which is also up 13 odd %. Kirloskar Electric also seeing an uptick of 12%. India Bulls, despite of Nifty Realty seeing profit booking today is seeing an uptick of around 11 odd %. You have Simplex Infra, which continues to gain in trade today, also seeing gains of about 10 odd %. But on the flip side, you have counters like Moltec Packaging, which are seeing profit booking today down by about 5 odd %. You have Jubilant Agri, which is down about 5 odd % as well. And some counters like Reliance Infra also down by about 4 odd %, and HMA Agra also seeing profit booking down by about 4 odd %. But that's with regards to where some of these names go in the small cap space. But let's also welcome in our guest for the day. As promised, we are joined by Deepak Chand Thakur, who is the CEO and co-founder of NPST, joining us on this side of the show now. Deepak, thank you so much for taking out the time. Mahima this side. My first question to you is with regards to how FY26 has fared for you. You've seen a multifold jump in the past 2 to 3 years when it comes to your top line growth. Year to date, you've done around 134 odd crores. Do you think 200 crore mark is possible by the end of FY26? Sorry, Deepak, I think you're on mute. Yes, go ahead.
Hi, Mahima. Thanks. So 26 has been a roller coaster. I mean, we have been in several efforts around building the SaaS-based platform, recurring revenues, a lot of those pointers around it. So last year, we have actually built a portfolio which helps us cross 200, no doubt about it. And for FY27, we have a much larger output coming through this platform which we have built last year.
We'll just come back to you a quick detour. My colleague is in an exclusive chat with Arjun Juneja of Mankind Pharma on the sidelines of India Pharma 2026. Listen in.
As far as the innovation versus generic drugs debate is concerned, where do things stand right now and where can India take a lead?
I think innovation in India has recently started. I think India was still playing the generic story. I think the generic story now has started fading. And soon we will see many Indian companies developing innovative drugs. We have also started as Mankind Pharma. We have few programs into the innovation space, both in small molecules as well as in biologics. And in the next few years, you'll see something coming out from our pipelines as well.
So as far as the specialty or the innovation drugs is concerned, how much revenue do you expect to make out of it in the next 5 years?
In the next 5 years would be a small revenue because it'll take us at least 4 to 5 years before we come out with some innovative drugs. But I think over the next 10 years, I would say substantial portion of our revenue should come from innovative drugs.
So are Indian companies capable enough to do some big scale acquisitions and especially in the US market?
Yes, I think Indian companies are capable of doing big scale acquisitions. Indian companies have done big scale acquisitions in India. We've recently acquired Bharat Serum, which was about a $2 billion kind of an acquisition. So yes, Indian companies are capable. If they can do acquisitions in India, why can't they do it abroad? And many Indian companies have done it in the past.
And so very lastly, we are rightly talking in the middle of the West Asia crisis. The war has lasted by more than a month. Are you seeing some impact of raw material prices, and especially with the shipping routes and the the air cargo routes being completely jammed? How is it affecting your business?
I feel the effect hasn't started to come in yet because the industry was still sitting on older inventories. But I feel in the next 15-20 days or a month's time, effects would start to come in, especially with the shortage of LPG, petroleum-related products, which are used in manufacturing our APIs and formulations. So I think there will be inflationary price hikes which will happen because of the war, and I feel it'll take about 6 months to 1 year. Even if the war ends now, it'll take about 6 months to 1 year before this will all end because there's demand and supply gap, and demand is more and supply is less, and even if all the refineries start, so it'll take some time for the supplies to come back to the original levels.
So thank you so much for being to NDTV Profit. Pleasure speaking to you. Thank you.
All right, okay. So of course that was the management. You heard from the management with regards to Mankind Pharma. But switching back and talking about NPST, we were talking to Deepak. Deepak, you talked about FY26. Just want to get a sense, with regards to FY27. If there are internal targets that you've set for the company with regards to your top line, you've, if I'm not wrong, said that your EBITDA might be in that sustainable range of 30 to 35%. What is the internal target that you're aiming at when it comes to FY27?
I have already given an understanding to the market that for the next 2 years, we continue to grow at 70-80% odd. And that's majorly because of our heavy investment, which we did in RegTech segment. In fact, we recently bagged a deal with one of the large PSU on that front. Parallelly, the investment we did around creating, our own ecosystem around giving the plugin around the digital payments, that has also got launched. So all of these is, and plus the global push that we are currently doing, that helps us achieve this number for the back-to-back 27-28 outlook that we are looking at.
If you could just dwell into more details, the 70-80% growth that you are seeing is on the back of the investments. How are these investments going to help the company, and what is the foreign expansion that you're looking at? What is that expansion? How will that also aid onto your numbers? If you could just delve into more details, sir.
Like I said, our strong domain has been technology partner to banking and regulated entities. This is what we're doing already. However, we were missing out on the mid to small banks, mid to small regulated entities. To look into that segment, we started investing into a completely new SaaS-based solution, which was possible to sell in a plugin model. So that will be an additional revenue. Secondly, our foray into RegTech is majorly because we have ensured last 2-3 years whatever we have learned in payments. How do we secure that entire ecosystem with our risk engine? and how do we provide a risk score to the banks and the entities, to prevent the fraud in the system. Now that is of much demand in the industry. We launched that solution and we got the first order. We believe this is also going to add a lot of revenue to the organization, which is again incremental. And beyond this, we are also seeing global demand for the Indian technology companies, which are majorly into digital payments, because I'm proud to say that we are first world in this particular segment, India, and whatever we have built here, there are others who would like to replicate that. So we stand at a cusp wherein whatever we have built, learned, use cases, what we have solved in this country, these are straight away, something that Africa, Middle East, LATAM, Central America, and even Southeast Asia, these are the areas where the demand is high.
Okay, Deepak, you talked about your international, business scope going forward as well. Just want to understand, as to going forward, let's say 3 years down the line, how much meaningfully do you expect these, international counters to contribute to your business? What is the scale looking like?
Right now, what we have seen is, at least for next 2 years, anywhere around 20 to 30% contribution coming from the global market.
Okay.
And that's majorly on the technology partner role that we are playing right now in India. And as and when we go forward, the success of RegTech in domestic market will help us multiply that particular piece as well in the international market. So maybe 2 years down the line, the contribution will increase on that front.
I just wanted to understand any other capex plan that you have for FY27.
Majorly investment into digital currency, what RBI is looking at. That's one area we would love to look at. Secondly, reinvesting into the RegTech segment in the areas and the use cases which are multiplying day in and out. That's again our investment. And thirdly, whatever we have built around the service aggregation business, how do we take it to the direct, customers? So far, we have been servicing through our orchestration platform to the payment aggregators. There is a need for the large scale merchants on the technology front, and that is the area where we are investing now.
Just one last question, Deepak, from my end, is that what are the top risks that you're seeing? Because regulatory reforms and around this are also tightening. What is the kind of 2 to 3 big risks that you're seeing? Is it execution? Is it regulatory framework? What is it that you foresee?
Any solution which, as per the regulatory requirement, is not required, and if that is something that will come up, then our portfolio where that particular product is servicing those customers, that is where it will get impacted. And at the same time, we being on a technology front, any reform coming in from the regulation, any impact from the decision coming from the regulator, that will either bring down the revenue coming in from that particular product or provide an opportunity to create a completely new product. So being a tech partner to them, I think there are certain areas where we find a risk around the product, but we also see an opening for the new opportunity coming up.
Okay. All right. Deepak, thank you so much for taking up the time and helping us understand as to what the future of the company looks like. Thank you so much for joining us here at NDTV Profit.
Thanks, Mahima.
All right. With that, let's also welcome in Narendra Solanki, Senior VP and Head Fundamental Research Investment at Anand Rathi, joining us now. Narendra, you heard the management. Any particular views or thoughts on NPST?
Good afternoon. First of all, let me start with disclaimer. We do not have any active recommendation on this particular stock. And now coming to the plans heard from the management, I think the growth is very strong and the future plans are also very aggressive, which should continue to maintain these high level of growth. Now, looking at the valuations, I think that the market has already priced in 3 to 4 quarters of earnings. Now, the further return would depend on the timely execution of the growth plans and how soon the overseas business ramps up for the company. So that would be the key to watch for the company. And at this moment, it's it's an interesting stock to track.
The next stock that remains in focus is DMCC. Now, it's a manufacturer of sulfuric acid. The stock has hit an upper circuit of 20% on the back of strong volumes, and this is its biggest intraday move that we have seen since 2022. So is China banning export of sulfuric acid the major reason behind this move? Let's get in Varsha to understand more.
Yes, so today, yes, this is one of the reasons why the stock is under focus, as China is supposed to halt sulfuric acid exports starting May, and this move will. So if you see why DMCC is up, let's see the 4 points. One is, of course, the China restriction supply leads to global chemical prices rising, and DMCC is a specialty player which can pass on the higher sulfuric acid prices to its customers. Now they'll also benefit from higher realizations in sulfuric acid and the derivatives of sulfuric acids, which DMCC is actually into, being a specialty player. China plus one shifts will lead to potential increase in export demand, and of course specialty portfolio, if you see, of this company gives pricing power versus commodity players. So these are key main reasons why DMCC is up. Talking about their business updates, well, their sulfuric acid operations are running at 95 to 100% utilization, and the sulfur cost increases have been passed on so far. So this gives us the confidence that company will be able to pass on these prices going ahead as well. Onto the Europe outlook, exports to Europe dropped sharply due to demand collapse, and the management is pessimistic when it comes to Europe recovery, and they are seeing this as a structural issue and not cyclical. Onto the capacity mix, that is specialty versus commodity. Specialty chemicals are operating at 50% of utilization, and significant unused capacity remains, but the specialty segment carries higher margin, and Europe loss has hit specialty utilization at the most, which is expected to recover soon. So overall, China limiting it or banning its exports of its sulfuric acid is what letting this stock buzz as of today.
Right. Ms. Narendra, you heard Varsha. After that 20% up move, would you recommend this stock to your clients?
Again, we do not have any coverage on this, but if you see after the West Asia issue, the oil supplies have been impacted substantially, and sulfur is also one of the key ingredients, which is a side product of oil refining, etc. And India is an importer of sulfur. I think 60%, 65% of the sulfur demand is met through imports. So definitely there is a crunch in the both domestic as well as import markets, and the prices have been on the rising side. However, it remains to be seen because the sulfur is also used in lots of downstream industries like fertilizers. So how much the price can company pass it on to its end users would remain to be seen, because ultimately if prices rise substantially, then the government should step in and impose some kind of a price control over there. So that would be a key risk for the company. So you have to keep in watch that aspect in the moment, and I think it's good days for the company if it's supplying to sulfur at this time in the markets.
Okay, all right. So that's the view coming in on DMCC. It's time to take a look at the F&O space, and we have Sharad joining by to give us a perspective. Sharad, have things changed from when we last spoke?
Well, yes, there was a recovery at play coming in, but definitely we cannot rule out volatility, especially in the last 1 hour of trade. The VIX itself is still, you could say, elevated. It has not corrected as much, but yes, there was just only one green last time we checked. That was NTPC, but now ICICI Bank, Bharti Airtel, Sun Pharma and BL also make it to the list. So there is a minor recovery at play, but it's not that convincing because HDFC Bank, Reliance are still not participating, and the concerns definitely for the auto stocks, especially look at Maruti, that stock is down 5% as well. And BankX also, there are mixed signals coming in, but let's focus on the stocks where the action is and where we are seeing long build up. And that has not changed yet. It's the power theme which is doing well, be it JSW Energy and Tata Power. Let's see what's there in the short covering. And if you could just pull out the stocks, we have Voltas and Hudco. Voltas, remember, the AC related stocks are in focus. IMD is going to come out with its update on the monsoon also, and it seems like there might be a little bit buying again in this cooling theme. Long unwinding for PNBC and Housing Finance and Samvardhana. And lastly, I'd like to point out the short build-up, and that's definitely happening in the auto space, Maruti Suzuki, Hero Moto, and there is definitely a concern in the NCR space as well. So these are the important stocks which should be in your radar.
Right, let's go across to Danish to understand what the management of Biocon has to say.
Seen a lack of availability, but of course costs have been moving north. We've seen shipments, logistics being challenged, and there is a general availability of connections for products to move in and out, which has been challenging than before. But fortunately, so far things have moved in the right direction. Let's hope that it solves itself soon so that we can get back to the business of getting people their treatments on a more regular basis.
So would we see any kind of an inflationary pressure on the pharma companies and kind of some price hikes on medicines later on?
I mean, you typically do not want any of these to be passed on to patients, and typically these kind of charges in the longer horizon should even themselves out. But in the shorter interim, you could see some cost build-up that would happen purely on the logistics and the availability side of products, and there could also be a supply that would be intermittently affected, and that's where these things will affect in the shorter window.
So there's one big famous debate in the pharma industry about the generics versus India taking a lead as far as innovative drugs is concerned. So how can we take an advantage as far as specialty or innovative drugs is concerned?
See, India has been exceptionally good in terms of what we do, in terms of making sure that we can supply large quantity of drugs, which is why we are called the pharmacy of the world. And cost arbitrage has really been an area where we've excelled. What is the shift that we see happening is that we move towards more capability-led leadership, which is where we move from volume to value. And I think India is on that upward trajectory. There's a lot of conversation even here at the FII event that we are in today, where the Honorable Union Minister J.P. Nadda ji talked about it. The Honorable Minister Anupriya ji Patel talked about it, where the whole focus is to see how can we encourage Indian innovation. And that's the shift that we see happening. Of course, cost will be an advantage, but if we can move that up the value chain, then India will build towards a Viksit Bharat.
So very lastly, how can Indian pharma companies have an edge over the US companies, and would we see some interesting acquisitions in the future?
I think more than having an edge over anyone, I think there is certainly a lot of capability that exists within the country, a lot of talent, and I think with the right policy framework that I clearly see when the union budget was presented, it already sets that framework. India is really set to do far greater things than what we've done so far.
So many thanks for speaking to NDTV. Pleasure speaking to you. Thank you so much for giving your time, sir. Thank you, sir.
So that was the MD and CEO of Biocon, Shreyas Tambe, speaking at the India Pharma Event 2026. But let's focus on our next small cap buzzer. Sager Glass is the one that's been buzzing since the past 7 sessions. And we have Varsha joining us to give us a perspective. Varsha, it's locked in upper circuit today as well. What did the management exactly tell us, and why the stock has been buzzing?
Yeah, so it's been like 7 days since we spoke to management, and the stock has been on upper circuit or has been buzzing since that interview. And let's see the key highlights of that interview. Well, they're expecting FY26 revenue to be 400 crore with profit of